in consumer sentiment in December. That's carried forward into the data that we got today from the University of Michigan. The 2-month increase we've seen in the last 2 months is the highest we've seen since the 1990s. So we really do have a surge in consumer sentiment that I think is basically catching up to the other economic data that we've seen now for months and months. Declining inflation, wages continuing to grow at a steady pace, job growth continuing to power forward. And so I think sentiment is trying to catch up with the data. And if anything, the sentiment should continue to improve going into 2024. I mean, look at what we have on tap. We're likely to have several interest rate cuts, which will reduce the cost of getting a mortgage, reduce the cost of credit cards, and so on. You should have continued job growth, and you should have more and more months of inflation that's basically at or near the Fed's 2% target, which means inflation will be less salient than it was before. I would project that sentiment will continue to increase as we get closer to the election.
Spending time with Bharat Ramamurthy today on Bloomberg Sound On. I know you didn't work for the communication shop in the White House, Bharat, but I wonder what you make of the pitch, Bidenomics, the president getting back on the road is in Raleigh this week, making the case he'll continue to do that, I'm sure, throughout the campaign. But this is a moving target sometimes. You're updating, you're refining that pitch, and I wonder to what extent you would want to put a finer point on what Bidenomics is so it can begin connecting with people and show up in the polls.
Yeah, at its core, really, Bidenomics is about evaluating the economy based on the well-being of your typical middle-class family. I think what the president has consistently cared about in his time in office, and frankly for decades before that, is your typical middle-class family doing well? Are people who are on the lower end of the income scale getting a chance to climb the ladder into the middle class? And what kind of financial security are we providing for middle-class families? I think that's underlies the type of response he brought to the pandemic in 2021 with the American Rescue Plan. That's at the heart of his Made in America agenda and trying to bring back manufacturing jobs. And that's at the heart of his regulatory agenda. And I think if you look at the data, which is starting to get stronger with each passing day, you see that wealth for the typical family has gone up 37% since the beginning of the pandemic. You see that wages, adjusted for inflation, have gone up quite a bit since the beginning of the pandemic. You see that job satisfaction is at its highest level in 36 years. So the president had a clear agenda, which was to deliver gains to your typical household in the United States. And I think that even though we've come through a global inflation surge, he has delivered that. And it's worth noting that a lot of other countries haven't, and that whether it's the United Kingdom or the EU or Japan, those countries are limping while the United States is running ahead.
Mm-hmm. Bharat, it's interesting you to talk about how wealth has gone up, because obviously a lot of wealth is centered in home ownership on the one hand, but also in financial investments. And we're talking to you on a day where the S&P 500 has reached an intraday record high. The stock market has been on fire, but unlike his predecessor, former President Donald Trump, Biden doesn't really seem to want to talk about that much. Should he be doing it more?
It's not really the president's style. I mean, I think it's worth remembering that about 50% of American households don't have any exposure to the stock market whatsoever. And so what the stock market is, it's an important economic metric, one of many, but it's really a metric that applies to the top half of Americans. And so the president's always going to be more focused on, what percentage of people are unemployed, what are wages doing at the lower end of the spectrum and the middle end of the spectrum. And I think on all those metrics, we're seeing really strong performance. I do think it helps with overall economic sentiment, economic news coverage to see stock market gains. In many ways, it is the economic indicator that gets the most amount of coverage. Now, there are other data points come out on a monthly or quarterly basis. There's stock market data every hour, every day. And so I think when you have good news in the stock market, it tends to drive better overall economic news coverage, and that'll end up benefiting the president. But it's not the focus of his policies.
What's the campaign look like then in delivering that message? Is it more in person, Bharat? I know you're not a campaign strategist, but what would you want to see? You had your fingerprints on this policy, and I wonder what the most effective way to bring that forth is. Is it the president himself speaking? Is it more folks on Capitol Hill or something I'm not thinking of? Maybe you can enlist Hollywood here.
Yeah, I mean, look, the most effective spokesperson for the president's policies is the president. And what I've seen over the last 3 years when I was working in the White House is that when the president is out there interacting with voters in a more informal way, and is able to talk through his rationale for why he did the things he did, when he's able to take on concerns from voters and explain why he thinks things are going to get better, I think really that's when he's at his best. So as you said, I'm not in a position to tell the campaign what to do, but if I were, I would tell them that trying to get the president out there to do these kinds of events will be beneficial, because he's a likable, relatable guy who really cares very deeply about the well-being of the typical American, and that'll shine through the more you get to see him.
And another thing that maybe separates his style from the former president's style is he has been very reluctant to weigh in on the policy of the Federal Reserve. Bharat, just a final minute with you. We have seen after the data today the odds of a March cut from the Fed going down, at least in terms of how it's priced by the market. Do you think it would be a mistake for the Fed not to cut rates at that point?
Well, I guess I would say I think the data leans in favor of the Fed starting to cut in March. I think it's a close call, but I think that that's what the data suggest, in part because the CPI and other inflation data that we have now is a little bit out of date. It doesn't reflect fully the housing disinflation that's in the pipeline and that we know is coming. And so I think that if the Fed is going to do several cuts over the course of 2024, which is what they're predicting, that it makes sense for them to get started in March. That said, you're right. The president really respects the independence of the Fed. He wants them to be data driven. He has appointed people there that he trusts to interpret the data and to make the decisions that they're going to make based on that data. And that's not going to change going forward.
Yeah.
And I think by the way that president's approach on that has been vindicated. He stood back and let the Fed do what it needed to do
its work.
And now look where we are.
All right, Bharat, we got to leave it there. Thank you so much for joining us today. That's Bharat Ramamurthy, former Deputy Director of the National Economic Council, now at the American Economic Liberties Project. This is...
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 2:21 on Wall Street. I'm Denise Pellegrini. We check the markets for you all day long here at Bloomberg. Stocks are surging. We have the S&P 500 hitting a new intraday record high. We'll see if we can close holding on to those gains, those record gains. You know how usually in January consumers are in kind of a funk as we stare down all those credit card bills from the holidays, wonder how we'll pay for them? Well, that is not the case this year, apparently. Consumer confidence unexpectedly surging in early January as inflation concerns wane. But watch out, all this optimism could mean more economic strength. Margit Patel, Senior Portfolio Manager, Allspring Global Investments, says the Fed might not cut interest rates this year the way some people think.
I think really we'll see rate cuts, maybe one or two in the second half. I don't see any reason to expect them to act in the first half. But of course, they'll want to be clear of the election. So if they don't act by summer, then they'll really be in a holding pattern until after the election.
And Patel there on the Bloomberg Surveillance podcast, which you can download wherever you get your podcasts. Investors not really too focused on those fears, though. Right now, the Dow up by 1.1%, 411 points higher. The S&P 500 up almost 1.2%. 56 points higher, 48.36, well above the latest intraday high. And the NASDAQ, it is also surging up almost 1.5%, 234 points higher. Spot gold right now, it is up about 0.2%. NYMEX crude down 0.7%, 73.54 a barrel. And the yield on the 10-year right now, 4.16%. Amazon's proposed $1.4 billion acquisition of Roomba maker robot getting some attention. It is expected to be blocked by the European Union's antitrust regulator over concerns that deal will harm another robot vacuum maker. And Amazon shares, they are slightly lower right now. iRobot shares, they are plunging on that news. And that is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
On the eve, I guess we could say, of the New Hampshire primary, obviously that'll be Monday, but it's the eve before we all delve into the final weekend
of our trip to New Hampshire, because we're going to try to get there tomorrow.
And it's the final weekend. This is like closing argument time, which is a big deal if you're named Nikki Haley, because, boy, this news today that Senator Tim Scott is going to endorse Donald Trump tonight just made this a little bit harder for her to pull off.
Yeah, pretty remarkable to see this news. Of course, she hasn't gotten that many endorsements so far in this race. She did get the very critical endorsement of the governor of New Hampshire, Chris Sununu, but hasn't gotten that many congressional endorsements. And obviously, Tim Scott not going to be counted among those as he throws his hat in the ring for Trump, despite the fact that Nikki Haley is the one who nominated him to the Senate in the first place.
Pretty incredible. And as we get ready to get on the ground in Manchester, we're bringing a lot of voices from that part of the country who understand politics there, beyond Rick Davis, of course, who has a way with New Hampshire. But when we get into the geography, the demographics, there's just something unique about New Hampshire, the role that independents play. And we wanted to bring in Colin Reed for part of that conversation today. He used to work for Senator Scott Brown. In fact, was campaign manager for Scott Brown in New Hampshire, described, as I read, by a leading pollster as the best campaign in the country. That's not bad. You know what else they say about Colin Reed? He's been on this program before. A veteran, this is the Hill, of the Oppo research wars that have helped define presidential races. So, Colin, we're going to get more Oppo on Nikki Haley this weekend. What are we in for here in the last couple of days of the campaign?
Well, first of all, it's great to be with you both, and I'm jealous that you'll be traveling up there tomorrow. And you're right, we're in that closing final stage. Voters are it's less about being persuaded at this point than it is about the various candidates and campaigns making sure they get their people out to the polls in what has very, very quickly become a two-person race between former President Trump and Governor Haley. And to think that after the 2016 Republican primary, when there were so many people on that stage, they had to have multiple debates. And even earlier in this campaign, when there was 8-9 qualified people, to get down to 2, it's a pretty remarkable thing. And it allows both campaigns to really have a clean shot at the other. So we're in that final stretch, and it's an exciting time for sure.
Yeah, and in this final stretch, Nikki Haley remains, at least in the latest polls we're seeing. There's been a few outliers, but behind Trump by a significant margin, and she's not debating in New Hampshire, as we maybe thought she would be just about a week ago before we got the result from Iowa. So how hard is it in these final days to actually make a dent, improve her numbers, if she's not doing it on that kind of platform?
Well, Governor Haley has run a quintessential New Hampshire campaign from start to finish. She's done the town hall meetings. She's been up there. She's been grinding it out. And she and her team placed an emphasis in the state early on. And it makes sense because 40% of the state's electorate don't belong to either political party. And those independents can vote in the Republican primary. And frankly, why wouldn't they? Because there's not a whole lot going on the Democratic side. In fact, Democratic president can't even be bothered to put his name on the ballot. So if you're an independent, the Republican game is the entire show in town. Now, as it relates to the final stretch, President Trump, we haven't been in this situation since 1892 when we've had a non-incumbent essentially running as an incumbent, and that was Grover Cleveland back then. Things have changed a lot since then. And President Trump, for everything, all the challenges he faces in the court of legal and public opinion, he still is, by and large, the sitting incumbent president. And in Iowa, he won with 50% of the vote. That means about half the people voted for somebody else. And if you're an incumbent president and you're only getting half the vote, that's not necessarily a place you want to be. So Nikki Haley's got her work cut out for her, no doubt. It looks like consistently across the board, the polls have her a few points down, but she's closing hard, she's closing strong, and she's got a message tailor-made for that independent-minded New Hampshire electorate.
Sure seems like Donald Trump is going to be hard to catch, though, here. What's the path, Colin? If Nikki Haley even wins New Hampshire, where do we go from here? Donald Trump is topping her by 50 to 25 or some ridiculous spread in her home state of South Carolina. How much of a gift would even a win be in New Hampshire?
Yeah, well, the thing with New Hampshire is it'll allow Ambassador Haley to move on. It'll allow the race to continue. Governor DeSantis isn't really competing in New Hampshire for all intents and purposes, so he's placed all his marbles in the South Carolina bucket. And then, look, it's going to be a challenge, no doubt. The one thing I'd say the Haley camp has going for them is that a lot of these primaries, you look towards Super Tuesday, I believe it's of the 14 states that are voting, 9 of them have an independent. They're not a closed primary, meaning independents can vote. And again, if you're an independent-minded voter, if you're unenrolled in either political party, we know poll after poll after poll tells us that Americans, by and large, are extremely unhappy with the idea of a Joe Biden versus Donald Trump repeat. And I think you're starting to see that in Ambassador Haley's messaging these last few days. She's starting to take more shots directly at former President Trump. And there's only one way to get by him, and that's to go through him. So it seems like she's reached that conclusion, and we'll see if it's enough to get her to where she needs to go coming out of Tuesday.
Yeah, but Colin, did she reach that conclusion too late? We're a pretty far way into this thing, and that's not the song she's been singing this entire time.
Yeah, and we'll find out. Look, I think the critique she's made on both of them as being kind of elderly, past their prime, over the hill candidates is one that's resonant, especially beyond just the hardened Republican base, which is by and large going to be with Trump. So, but at the same time, it's almost the impossible riddle because the former president does enjoy such high favorable ratings amongst hardline voters. Politics 101, you don't want to be saying negative things about a person that is viewed very favorably. So we'll find out, and there'll be plenty of ink spilled on that on Wednesday morning. But I think the way she's able to offer Republicans a different path forward, again, there's in New Hampshire is just tailor made for her because there's a lot of people up there really unhappy with the way things are going. Really don't like Joe Biden. Joe Biden is not someone who's ever done well in New Hampshire throughout his 3 runs for office. He left the state early in 2020. He just got blown out so badly. So, and we've seen it before. So New Hampshire's delivered surprises in before, and I wouldn't count Governor Haley out. But yeah, that being said, President Trump is a political force for sure.
Colin, let's go to ground in our remaining moment or two here. What will you be watching? New Hampshire. What will you be watching on Tuesday night? Will it be those conservative suburbs along the Massachusetts border? Or are you going to wait to see what happens in the rural areas that might help to turn this into Nikki Haley's favor?
The entire ball game in terms of population is right on the Mass border, or at least in that Boston media market. Like 7 in 10 voters get their news from Boston, and that's where it's going to be. And these are people who are, a lot of them commute down to Boston. A lot of them live in New Hampshire because they don't like the high taxation states of some of the neighboring states. And these are people who really don't like the Biden policies, probably didn't really love the Trump policies. And these are the people who or who Nikki Haley needs to come out and vote for. And look, it's a small state. This is why these small states matter, because between the next 96 hours or however much time until the polls close, there's a pretty good chance that if you work it hard enough, you can meet a lot of these people up close and personal at a market basket, at a Dunkin' Donuts, you name it. And these candidates these voters tend to break late and break hard. And Governor Haley's got some time between now and Tuesday to kind of make the case and get them out, because after this, New Hampshire, it gets awfully late early in terms of this primary process.
All right, Colin Reed, South and Hill Strategies co-founder and Republican strategist, thank you so much for joining us. And of course, Joe, the other thing we have to consider about New Hampshire is maybe what turnout's going to look like, considering it is not going to be the historic wind chills we saw in Iowa. And because it's a primary, people can show up and vote throughout the day versus having to be at a certain location right at a certain time in order to participate.
It's also considered, sport in New Hampshire. Like that, everyone's like, you'll have guys with like no shirt on and makeup like they're going to a football game. That'll be the Trump rally, not going to vote. We'll find out at some polling areas. But, you'll see the guy like the Trump impersonators in the orange jumpsuits walking on Elm Street. It does seem to be something that people want to be involved in. And to your point, it's going to be 40 degrees on primary day. That's shorts weather up there.
Yeah.
You're bringing your shorts, right?
I should.
Let's get up to date on the news. Keep your shorts ready, Nancy Lyons. World and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. 5 Arab nations are quietly touting a settlement for post-war Gaza, for which they've secured the backing of the U.S. Just one problem. The Israelis are not keen on the concept of a two-state solution, which is at the center of the proposal. Bloomberg's White House reporter Jordan Fabian says President Biden did speak with Israeli Prime Minister Benjamin Netanyahu today.
It's the first time they've spoken since late last year. These calls were happening very frequently after Hamas's attack back in October, but there have been some tensions in that relationship that have grown over the past few weeks. And so we don't know exactly what was said on the call. We know they discussed the conflict, but you could see this as maybe an effort to ironing out some of those differences that have become public over the past few weeks.
Bloomberg's White House reporter Jordan Fabian. Also in the region today, officials say U.S. fighter jets hit Houthi rebel sites for the 6th time, taking out anti-ship missile launchers in Yemen that were preparing to fire. Thousands of anti-abortion activists are marching in the nation's capital today for the 2024 March for Life. It's the group's second march in Washington since the Supreme Court overturned Roe v. Wade. House Speaker Mike Johnson addressed the crowd.
Our rights do not come from government. Our rights come from God, our creator. That's right.
Johnson also told them this is their moment to turn the tide on public opinion regarding the right to life. Turnout was lower this year due to a winter storm that hit the nation's capital. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Well, stocks are surging. It's 240 on Wall Street. We check the markets for you all day long here at Bloomberg. The S&P 500 levitating at a new intraday high. We do have word, though, Macy's and Wayfair are cutting thousands of jobs. Macy's shares lower. Wayfair shares up more than 9%. Dan Suzuki, Deputy CIO, Richard Bernstein Advisor, says, don't worry too much about the fate of retail.
My personal opinion is if you look at the drivers of consumption like labor and wages and overall economic growth, it's going to be gradually slowing here. And so I think it's normal to expect that to gradually slow, but clearly not fall off a cliff.
And Suzuki there on Bloomberg Television. The Dow right now better by 1.1%, 425 points higher now, pretty much sitting at session high. The S&P 500 up almost 1.2%, 56 points higher, 48.36. That is way better than yesterday's or the previous intraday high. And the NASDAQ right now up by more than 1.3%, 230 points higher. The yield on the 10-year right now, 4.15%. That's lower. Spot gold gaining up 0.3% now. NYMEX crude down just about 0.8%, $73.51 a barrel. Apple shares up 1.5%. As we've been talking about, Apple's Vision Pro mixed reality headset up for pre-orders starting today. And either there aren't very many of them or demand is strong, because if you look now, you'll have to wait until March. The first people to order will be getting theirs February 2nd if you ordered one earlier this morning. And that is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
All right, I'd like to send a prayer up to the travel gods that Joe Matthew has an easier time getting to and from New Hampshire than he did Iowa.
From
Planes,
your lips to God's ears.
automobiles, and trains all failed you in different ways.
I really
during our
did
last
feel like
adventure.
John Candy. I never had to use shower curtain rings to get a hotel room, but boy, one more night and we would have been there. We're all shipping off tomorrow.
Yep.
It is snowing like it's for real
really
for DC.
snowing,
This is real snow. It's beautiful when it comes down. It's not so great when you try to take off.
Especially
Hopefully
because
that'll be all clear by tomorrow.
DC and DC airports don't tend to handle snow in fabulous fashion.
This is true. You grew up here, you know.
But trains also didn't really work out
The
as well
trains
for you
didn't
either.
work either in New York, David Weston. They told us the equipment was frozen. I can't get a ride out of here.
Yeah, we do want to talk about trains a fair amount. Although I will say, Kelly, that is the greatest understatement. I lived for years in Washington. To say they don't know how to deal with snow way understates it. I mean, you know, if there's a half an inch, they shut the whole place down. You know, coming from Michigan doesn't work.
Now.
But something near and dear to all of our hearts who want to take that train back and forth between Washington and D.C. is Amtrak. And we talked actually with the president of Amtrak about that issue and saying, you know, it's really nice you're tooling around really fast, it's going fine, and then all of a sudden the thing slows way down for a long period of time. When are we getting all those bottlenecks done? And this is actually Roger Harris, and this is what he had to say about the help that's coming our way.
Certainly, it takes a long time to get everybody to agree to all portions of the projects, but you're beginning to see real results of the infrastructure bill and the funding that came from that, and previous work. So, for instance, as you leave New York going towards Washington D.C. today, as soon as you come out of the tunnel underneath the Hudson, you see this enormous bridge going up on your right-hand side, which is the new Portal North Bridge that New Jersey Transit is developing together with us. And you'll see that we're well underway.
So help is on the way, they tell us. I'm sure we'll all be happy to hear that. We talked to him actually about the problem that he had this week because of cold weather, because as you know, they shut down the Acela altogether one day. You couldn't take it at all. And he said, look, they were trying to avoid really disrupting other traffic as well. And he admitted they've got a problem. I never really thought about it much. That whole Northeast corridor is right along the water. And given the climate problems, it doesn't make it easy.
How about that? Yeah.
Yeah, well, Joe Matthew, David, knows very well that the Acelas were shut down because Joe Matthew tried to get on many an Acela with no luck.
I'm pretty sure it still hasn't left. It's still in Penn Station.
Well, we've got Roger's telephone number if you want to call him, Joe.
You put a word in for me.
But what else did he suggest to you, David? I know he says help is on the way, but theoretically, these are not short-term projects, right? We're talking a really long time before it's fully realized.
Well, yes, absolutely, Kaylee. Although really long time, I think it depends on what the project is, right? The tunnel under the Hudson River is going to take a fair amount of time. But as he said, they've got one bridge already going up. And as you know, they've actually appropriated, and the money is there now for something like $6 billion for bullet trains, and then another $16 billion for that Northeast corridor, with a lot of tunnels, a lot of bridges and things that they say they're going to get to work on right away. But he's hoping to double the traffic on Amtrak by 2030. So they've got a lot of work to do.
Pretty incredible. This is a story after Joe Biden's own heart, of course, Amtrak Joe. I wonder if he'll ever get on an Amtrak train again. It's a little bit difficult to do with the Secret Service and being president and all that, but it's a pretty quick trip to Wilmington if you don't have to get on an airplane. Spending time with David Weston here on this Friday before the New Hampshire primary. Wall Street votes is an important part of our coverage here, David. And I wonder what you have coming up on Wall Street Week later on.
We did sit down with Blair Affron from Center U Partners. He's a very well-known, very well-respected investment banker here. Also has ties clearly to the Democratic Party. He has backed a lot of Democratic candidates. And we asked him about the comparison of Donald Trump on the one hand and Joe Biden on the other. Not to say that they're candidates. They're not the candidates yet, but there's a good chance. And this is how he set it up about what these two alternatives mean for the economy.
I think it's underappreciated what has gone on with the economy. Unemployment at 3.7% versus the Trump years at 4%. Job creation, if you take out COVID as the impact, you still have 9 million jobs created under President Biden versus 6 million under President Trump. And even GDP growth, a few basis points higher under President Biden. So in addition to that, you've had a re-engagement globally. And when you think about our biggest and best companies, 60% of their business is outside the country, outside the U.S., therefore having an important, steady relationship with allies and adversaries, where you're protecting U.S. interests, but also looking out for the interests of corporate America.
So there you have perhaps the opening argument for the defense, if I can put it that way, for Joe Biden's presidency. But he makes some good points. And I must say, you must have looked at this as well today with the University of Michigan sentiment coming out.
Yeah.
It seems like some people, at least, are starting to think a little differently about the American economy. They're feeling a little bit better about it. It's still early going, but that is a little bit of a shift I think we're seeing.
Well,
yeah, we were actually talking with Bharat Ramamurthy, who used to be the deputy director at the National Economic Council, about that earlier this hour. But something I asked him was, okay, hey, have we reached a turning point on this? He seems to think we have, that actually that sentiment's going to translate into how voters feel about the president sooner rather than later. But I also asked him, why not talk about the stock market? I mean, David, we're at another record high today. This thing's flying.
Yeah, but you know the answer to that. Joe Biden is a blue-collar guy. That's the way he feels. That's where he is. That's what he wants to come across. And I'm just not sure that, go back to his origins in Philadelphia and the blue-collar workers he was with, I'm not sure it's going to appeal to him that much on the stock market. By the way, ironically, Donald Trump talked about it every other day, as I recall.
All the time, right? With hats.
Yeah, exactly. But
yes.
We have the S&P 500, you know, an intraday high of all time, right? We'll see where we end up, but it is quite a story. But I wonder whether it's something that Joe Biden can really cash in on.
David, you spent years covering politics and are at the helm of our political coverage at Bloomberg here long enough for me to be allowed to ask you what you're watching this week. And I don't want to ask you to be a strategist for us, but I'm just curious, what has your attention as we go into New Hampshire in a race that sure seems like it's curving to Donald Trump?
Well, listen, I wish I could be original for you, Joe, but you know me too well. I'm not that original. It's one simple thing. Does Nikki Haley surprise to the upside? And I don't think that's necessarily win, but surprise to the upside. Can she really at least take a little bit of a ding on Donald Trump or not? Because thus far it looks like he's just sort of marching right on through. But that's, I think, what I'm going to be looking at first and foremost.
All right, David Weston, host of Wall Street Week, thank you so much for joining us. And of course, before you look ahead to New Hampshire, make sure you look at Wall Street Week tonight. It airs at 6 p.m. Eastern time on Bloomberg TV. It seems like Nikki Haley herself is trying to set that bar pretty lower. She just wants to do, she says, better than she did in Iowa, a strong showing.
Well, it was a strong second yesterday. Now it's better than Iowa. That could be a weak second. I don't think that's going to be enough to change the narrative, though.
Yeah, but it seems like they're trying specifically to set the bar not at winning. ahead of this thing.
That's correct. We're going to find out in real time. She's got 3 more days to campaign. Of course, voting actually happens on Tuesday. We'll have special live coverage right here on the fastest show in politics. With Kaylee, I'm Joe. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm Denise Pellegrini. Well, it looks like there is demand for Apple's new mixed reality headset after all, in spite of the device getting snubbed by big streaming services. More from Bloomberg's Steve Potisk.
Apple's long-awaited Vision Pro is up for pre-orders as of today, and the first deliveries are scheduled for February 2nd. But delivery dates for all 3 models quickly slipped into March for online orders, and the device is already sold out for in-store pickup on day 1 at many locations. The apparent strong demand comes even as more streaming services snub Apple's headset, with YouTube, Spotify, and Netflix all not accommodating the device. Apple has largely marketed the device as a platform for video, games, and other entertainment. Steve Potisk, Bloomberg Radio.
And shares of Apple up almost 1.5%. Auto lender Ally Financial out with better than expected quarterly results. More of that from Bloomberg's Tom Busby.
Ally reporting more than $2 billion in revenue, just beating analyst estimates of $1.99 billion. Now, adjusted earnings also topped expectations, but consumer auto loan originations totaled $9.6 billion. That was slightly less than expected. Ally also announcing it'll sell a point-of-sale financing business that includes $2.2 billion of loan receivables. The buyer, Synchrony Financial. Ally has worked to lower expenses over the past year by pausing hiring and then by cutting jobs. Tom Busby, Bloomberg Radio.
And shares of Ally, they are up about 11%. And major job cuts coming down at Sports Illustrated, calling into question the future of the magazine's existence at all. And those are some of the company stories we're following.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
As we carry on live from Washington, let's get you up to date before some final thoughts with Kaylee Lines. Nancy Lyons has world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. A grand jury has indicted Alec Baldwin on an involuntary manslaughter charge involving that fatal shooting back in 2021 during a rehearsal on a movie set in New Mexico. Well, the move revives a dormant case against the A-list actor. Special prosecutors brought the case before a grand jury this week. This happened months after receiving a new analysis of the gun that was used. Baldwin, the lead actor and a co-producer on the Western movie Rust, was pointing a gun at cinematographer Helena Hutchins during a rehearsal when the gun went off, killing her and wounding director Joel Souza. Baldwin has long said he pulled back the hammer, but not the trigger, and the gun fired. Senate Democrats are renewing calls to reauthorize pandemic preparedness legislation. We get more on that from Bloomberg's Amy Morris in Washington.
After a Senate hearing on long COVID, Democratic Senator John Hickenlooper of Colorado said it would be, quote, very feasible to reauthorize the Pandemic and All Hazards Preparedness Act with funding. But Democrats recognize immigration and the budget will be dominating the conversation on Capitol Hill for a while. PAHPA, or PAPA, expired September 30th, and the latest stopgap bill only extends some health security measures through March 8th. In Washington, Amy Morris, Bloomberg Radio.
President Biden is forgiving nearly $5 billion in additional student debt as the administration seeks to deliver on one of Biden's signature initiatives with high stakes for his 2024 reelection campaign. Almost 74,000 student loan borrowers would see debt canceled as a result of administrative changes by the U.S. Education Department in this latest round of relief. Those affected include borrowers enrolled in the government's income-driven repayment and public service loan forgiveness programs. The NFL divisional round of the playoffs begins tomorrow. The Houston Texans will travel to Baltimore to take on the Ravens, and in the NFC, on Saturday night, the Green Bay Packers head to the West Coast to face the San Francisco 49ers. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
Okay, Nancy, thank you. Some pretty cool stuff going on in the next couple of days, not just the New Hampshire primary, but on this very program, Kaylee. This right here, look at this, with our loyal viewers and listeners on the radio and YouTube, the final 2 minutes ever of Sound On Bloomberg.
Yes, as Sound On. We're not going away.
We did not get fired. There is still time for that. But we're going to be going to an earlier time slot.
Yeah.
12 noon to 2 p.m. Washington time. And it's going to be called Balance of Power as we expand the franchise from TV here to Sound On. And this is going to be kind of our vehicle to cover an incredible and historic campaign season. But starting on Monday, a little bit of a different look, a different time. Mm-hmm. Our second hour will be on television when you grace us with your presence. And it's all up from here, right?
Yeah, I'm super excited. That was perfect.
Thank you.
I feel like we should probably also, tweet this out so people get their times locked.
We shall. We'll follow up on social media with that. But yes, when you find us on Monday, we're going to be in Manchester.
Yep.
And it's going to be pretty wild up there. We'll start at noontime, Manchester time, and we'll go through 2 p.m. Our colleagues at Bloomberg Business Week will follow us as well with their hour that's going to be on Bloomberg TV. And, it's going to be something to experience together. I'm just delighted that you're going to be along for the ride. Oh. We get to do this on TV, on Balance of Power, which will also be now shared on the radio.
Yep.
So we're pure play, baby. Isn't that what they call it in the business?
2 hours of Kaylee and Joe every day.
Just what everyone...
1 to 2, 5 to 6,
I really
Bloomberg
feel
TV
like they need that.
And radio. I'm excited. We have
I am
fun
too.
here.
This is fantastic. I started here a few years ago doing this 1 hour of political radio in the afternoon, sort of randomly happening on Bloomberg. Now, of course, we're in the throes of 2024, and it's very important to us here at Bloomberg TV and radio, and we're going to share our resources here on the satellite, on the radio, on YouTube, and on Bloomberg TV. And boy, we're going to experience a lot together in the next couple of months.
And there's no better place for a debut than Manchester, New Hampshire.
Yes, exactly.
0 to 100, Joe. Hard launch. Here we go.
What could go wrong? Hey, Carol and Tim will meet you on Monday. I'm Joe Matthew, along with Kaylee Lyons in Washington. Don't forget to shovel. I'll meet you in Manchester.
Sounds good.
And before that, on Balance of Power, Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. We are on a Friday. Yay.
It's Friday.
January 19th.
We're finally here. I'm Tim
are.
Stenivek along with Carol Masser. That's the voice you hear. Carol, guess what?
What?
This is the last Friday you and I are starting this program at 3 o'clock.
Because you know what?
Next week,
We'll be an hour in already.
we're starting at 2.
And?
Also, you can find us on Bloomberg TV from 2 to 3 every afternoon.
We hope you will join us at 2, at 3, at 4. Join us. We're looking forward to it. It'll be fun. We're already out on Bloomberg Originals. We're on YouTube, which we love. We meet our TV colleagues for twice an hour, but now we're going to be on for that first hour of Bloomberg Business Week. So we hope you'll join us and looking forward to your feedback and input. Having said that, the bulls are definitely putting a lot into today's market. They've sent stocks up. In fact, you've got stocks up, yields up. So too is consumer sentiment. The S&P on track for a record close. We already hit that, right, on an intraday basis.
That's right. NASDAQ 100 as well. Exuberance. Everything is awesome. Kind of seems like it.
Don't you say it.
We're going to break down the trade in just a moment.
We will indeed. On the markets, a seismic bond shift has traders watching yield curves moves. A normalization is what they're asking. Are we close to getting that? And how do we get that? Where does it happen, at the long end or the short end of the yield curve?
Also, company-wise, Ford shares, well, now they're up by close to 2%. This after being lower earlier. This on news that it's cutting its workforce with EV demand in low gear. Quite a difference a couple of years makes. We're going to break it all down with Keith Naughton a little bit later.
I love talking to Keith about this space and kind of what's going on. He's still upbeat, right, in terms of adoption. It's just maybe it's timing and how quickly we get there.
Yeah, that is
right?
The timing and how quickly I think is being felt by the entire
What do I always
industry.
tell my family? It's either timing or money.
Yeah.
This is how we get to things. Also, we're going to check in with the Chief Investment Officer at Valkyrie Investments. Their first full week of their spot Bitcoin ETF trading. So we'll see how it's going. I'm curious about fund flows in and out.
And that record gift for Spelman College, $100 million. The president of the school is going to be joining us on what it will do for the HBCU.
Yeah, that's a big one for them. I'm curious about how they're going to be using it and what it means for the school. Hey, also, David Weston stopping by, getting ready for Wall Street Week. They're going to talk Davos. They're going to talk about capital gains taxes and learning coding versus learning what's more important for the next generation.
Also, you may have seen it. It's one of the most read this week. The downfall of Diddy Inc. and how Sean Combs' empire unraveled.
Yeah, this is a good one. And it's 5 o'clock. Almost.
Not here.
But somewhere. We're going to talk with the CEO of Reserve Bar, what they are up to. We're looking forward to that. Right now, though, it's all about the markets. About an hour to go. Over to our TV colleagues. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Bonnie Quinn. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership with those folks streaming on YouTube. And for anyone that was betting here on a potential rally in this market, you finally got it. Up 1% here on the S&P 500, Carol Masser.
Yeah.
And if that holds, that will be a record high.
Yeah, big time, right? All in. It's interesting to see that. We're getting ready right for the Fed blackout period. We've got a little bit of times to go for that first Fed meeting. Having said that, you know, that consumer sentiment report this morning showed that consumers are out there. I kind of feel like it really goes together with the retail sales number we got for the end of the year. Like people are out shopping, they're feeling, are you okay?
No, but go ahead.
You know, maybe it's time for you to take a bit of a detox.
Here, let me, a detox.
Stop smoking.
So I shouldn't drink this vodka? What?
Yes, and put your phone down. I don't know if you saw this. Siggy's is out with a challenge to people to basically, right, Tim, do a digital detox.
Yeah, for 10,000.
Siggy, that's they make the yogurt,
Remember
right?
the yogurt
yeah,
maker?
Yeah.
And they're doing a digital detox?
Yeah, so it's obviously a promotion for Siggy's,
Sorry, I
but they're
need to
calling
cough
it
again.
a different kind of dry January.
Stop
Okay,
it.
so you know dry January when you don't drink alcohol. What about a dry January about giving up your electronic device. So they're doing this contest where you can win $10,000 and 3 months of Siggy's yogurt if you put your phone in a lockbox for an entire month. You can still have access to a phone. They'll send you a flip phone and a SIM card, but that smartphone, it's got to get under lock and key.
That seems very complicated.
$10,000.
Yeah.
I mean, I think I could
you do it,
Bonnie, do you think you could do it? I could do it.
If you paid me 10,000, I might do it, but I'm not going to do it for a competition.
Yeah, I think, if they gave me 10,000 up front, maybe.
Yeah.
No, they will. You have to enter to be one of the people who, gets the $10,000, or if you make it to the end of the month, you get the $10,000.
Only 10 people get it, though, right?
That's right. Yeah.
Cheap marketing.
Exactly.
$100,000.
Boy, you guys are such naysayers, man.
No, I guess. I mean, maybe we're naysayers here.
But
I wasn't aware of
that
this.
bigger point of like how much time we're on our phone. 5.5 hours a day for the average.
Yeah, I mean, there's a longer conversation we can have about this, but there's also the issue of necessity as well here. I mean, I don't know. I mean, I know you may spend all your day, Carol Master, playing video games on your phone, but some of us use it for productivity.
I mean, Romaine is day trading
to be
all
better
day
at our
long.
jobs, to be connected to our kids and our family.
Where do you buy all your dapper? How you look so dapper. Where do you buy your clothes? Is it online?
No, I have a guy in Baltimore.
Can you introduce me?
All right, where do you want to go?
I was looking at another story here too, though. Bonnie and I were talking here on Bloomberg Television a while ago about the downdraft that we've seen in Albemarle, big stock of lithium, making lithium, and a lot of this is tied to the weakness that we're seeing in the EV space. Yeah. Remember, there's been so much commentary right now here that rise in demand has now basically flip-flopped, and of course we learned a little bit earlier today that Ford, kind of confirming what we all knew, really scaling back now its EV, its F-150 Lightning vehicle production.
Yeah, it's fascinating because they're going to one shift, and one shift in an auto production facility is really almost nothing, right? But they are upping their shifts in the regular combustion engine type trucks. So it is fascinating to see that people are just going off EVs. It's not just the F-150 EVs. UBS out with a forecast for 11% growth this year. So growth, but not much.
I wonder, though, if this is kind of an own goal kind of situation. I mean, aside from the fact that, they price these things at obscene prices, but then there's the whole issue of infrastructure and a lot of the other things that you need to support this, and it just really wasn't there. I feel like maybe they came a little bit too fast and furious, if you will, pun intended, Carol Masser.
I don't know.
These things.
I don't know. I don't know. It depends on everyone's different in terms of the way that they use their vehicle. But a lot of people in the U.S. live in single-family homes and have garages and can charge these things at home. So from an infrastructure perspective, there are a lot of people who don't necessarily need to be charging these things when they're on the road.
I'll leave you with the stat on that, Tim, to push back. More than half the country lives on multifamily properties,
including.
The only thing I will say, I think you guys talked with Keith Naughton. We're going to too, and I know we've got to run. But Keith Naughton said the growth is there. It's just at a slower rate. So people are still buying them. It's
point.
just, so.
Yeah, I mean, no one's saying that the EV boom is over. It's just that the fast growth rate is in there.
I agree with you.
Do you own an EV, Carol?
Not yet. I agree with you. The prices have been crazy.
Yeah.
No, got an old-fashioned gas car.
Oh, okay.
Yeah.
I got a horse
the
and
environment
buggy.
thinks.
Remember we talked about age earlier this week?
No. Goodbye.
I'm out of here before we all get yelled at. All right, guys, we'll be back in less than an hour's time. We're going to wrap up the trading week, the trading day, radio, TV, YouTube, Bloomberg Originals. We will see you at 4 p.m. Wall Street time for Beyond the Bell. All right, could it be just a matter of time that U.S. Treasury yields would get back to the way they've traded for most of their existence? Bond traders. James Bond. No, bond traders. Okay. See what he did?
I do.
Our producer's so clever. Bond traders are growing convinced that we are near this.
So writes Bloomberg's Michael McKenzie and Liz McCormick today. Carol, you tweeted a little bit about it earlier this morning, the idea of which part of the yield curve gets us there.
Exactly. So let's get to it with Bloomberg News rates reporter Michael McKenzie. He's on Zoom in New York City. He's really become a go-to for us as we watch the moves and the volatility in the U.S. Treasury trade. Michael, so great to have you here. Great story. So bond traders very much, as you guys report out, watching the U.S. yield curve. Explain exactly what they are watching for.
Hi, Carol. They essentially think we're going to go into a period where the Fed will start to cut rates. And as it cuts rates, that two-year yield will continue to fall at a faster pace and actually drop below the 10-year yield. And effectively, you then create what's called an upward sloping relationship between short-term yields that are more sensitive to Fed policy and longer-term yields. And as we all know, if you lend for a longer period of time, you should get a higher interest rate. But right now, the US government is paying 4.4% to lend for 2 years, but only 4.14% to lend for 10 years. So at the moment, what we have is a negative or inverted yield curve, which is an anomaly if you look back historically over how yields normally trade.
You and Liz described the how, the why, and the when of normalization that has these financial markets bouncing around. Which one of these is the most unknown?
That's a really good question, Tim. And I think and you're seeing a bit of it today, right? We saw better inflation expectations coming out of the University of Michigan survey, but we saw a stronger confidence measure. So it seems to be we've got residual strength in the economy and inflation's coming down. So it's tough to see how do you gauge how many rate cuts the Fed's going to do here. So I think the market's pretty comfortable right now, still pricing in at least 5 rate cuts. But having priced in 5 rate cuts, the yield curve is still slightly negative. So what the bond market really wants to see in order to get that positive slope back in the yield curve again is at least 6, maybe more rate cuts, i.e. a harder landing for the economy. And at the moment, the economic data doesn't suggest that's really coming. So we're potentially going to be spending longer with this negative or anomaly in the yield curve. And if you look at one of the charts we had in this story that Liz and I wrote, shows that this is one of the longest periods we've had an inverted yield curve before the recessions arrived.
Sorry, Carol, to jump in.
No, go.
Is there a chance that the National Bureau of Economic Research might come to us over the next few months and look back at some point over the last 18 months and say there was a recession in a couple quarters? Or has that ship totally sailed?
Oh, I don't see how we'd have a recession in the last few quarters. I think the economy has been doing very, very well. I think it's just, I guess underlying it's been very, very resilient. And I think it's the resiliency which has really upset a lot of economists' models. It's a resiliency that seems to be challenging the bond market. The bond market, when it goes into an inverted yield curve, is saying this is a recession. And we quote Cam Harvey, who's the university professor who first, back in the 1980s, established a link between an inverted yield curve and the recession that does come. Now, he still thinks that we are going to get a slowdown, we are going to get a recession, that ultimately the curve will flip. So he still believes in the sort of predictive qualities of an inverted yield curve. But we are at a pretty interesting point here with the bond market and this economy. And I think it's surprising a lot of people, including the Fed, bond investors, and certainly economists.
Hey, Michael, can we get to normalization and the historical yield curve that we've seen without having a recession?
Yes, you can. And I think that's going to be one of the more interesting potential kind of tail risk scenarios here. Don't forget, the US government is selling a lot of treasuries this year. Mm-hmm. So if we have what was called a reacceleration in the economy, and that is a risk that some of the investors we spoke to and who we quote in the story do acknowledge, that the combination of rising deficits with an economy that does pick up speed again, because don't forget, we've had a really nice bond market rally since December and the Fed pivot, when they did say, look, we are going to be cutting rates this year. And that's actually loosened financial conditions. So the question now, I think, at the edges here of the market is, we could get a reacceleration in the economy. We could then see the Treasury having to sell more and more debt, and investors then demand higher interest rates before they buy that debt. So that way, the 10-year yield and the 30-year yield actually start to rise again, more so than the 2-year, because the Fed should cut to some degree because inflation is coming down. So you have this sort of Goldilocks scenario where the front end is still is going to do okay, but people shy away from earning 10s and 30s, and you do get a steepening of the curve, just not the way that the market actually thinks it should be coming.
Well, kind of going back to the how, why, and when a little bit, how much does the Fed need to cut to kind of guide the market and the U.S. Treasury curve back to normalization?
Well, I think this is the other interesting story, because you talk to some people and they say, well, market's pricing in about, or say 5.5 rate cuts for this year. The curve is still slightly inverted. So there's a camp that says the Fed would have to do at least 6, maybe more. But then there are others who say, historically, once the Fed starts to cut, the curve tends to then normalize very quickly. because the anticipation of more cuts builds. But I think what's going to be really challenging with that kind of scenario is, again, if the data is resilient, it's going to be hard for the Fed to cut more than, say, 50 or 75 basis points this year. And that's what they did in 2019. And if you go even further back to 1995, Fed rate cuts after those big bond market sell-offs were very small, only 50 to 75 basis points on both occasions. So, again, I think there's a lot of conjecture. I mean, ultimately, this is great for the market because they want volatility and they want it's going to be a real trader's market.
But, excuse me, Michael. So when you think about, I want to go back to this idea of the inverted yield curve, and you have this great chart in the piece that you and Liz did. Is there a chance that the rule about a recession following an inverted yield curve, a lot of stuff has been thrown on its head in the last 3 years in the recovery from the pandemic and the way we saw inflation uptick and supply chain challenges and whatnot. Is there a chance that we can kind of throw away this rule?
I don't think you can rule it out. I really don't. I mean, I'm with you, Tim. There's been so much stuff thrown around since COVID. All the models don't seem to work.
Yeah.
There's so much debate about the quality of economic data that we're seeing. A lot of head scratching. I mean, yesterday's jobless claims just completely contradicts the sort of the narrative that the labor market is slowing down, and it contradicts all these layoffs that have been announced in recent months. So again, I think you can't rule out the fact that this could be the one time when Campbell Harvey's model doesn't work. And I think people have lots of doubts. I mean, Claudia Sahm has lots of doubts about her Sahm rule regarding unemployment rising to a certain pace, which does mean you get a slowdown and a jump in the unemployment rate. So it's really up in the air. And I think it just means this year is going to be very volatile. I don't think, you could escape that. That's probably the one thing you can probably bank on. But there's a range of different scenarios and outcomes, and the bond market is struggling, really trying to get its head around that and be really confident that this is the way it will go.
Hey, Michael, one last question. Volatility, does it make it easier or harder to get to normalization?
You do tend to see volatility pick up when the Fed starts to cut rates because there's so much uncertainty about the economy, and the uncertainty starts to pick up. I suspect there's a limit to how high volatility can go. It becomes very problematic trading in treasuries if volatility really shoots up like we saw in 2020 and even during 22 when the Fed was really aggressively raising rates. And what's interesting, if you do look at various measures of volatility in the bond market, they are much higher than historically in, say, the last 15 years. They're certainly very much at odds with the equity market measures of volatility. And there's two ways of looking at that. You can say, is the bond market a leading indicator here? And that ultimately the volatility you're seeing in the bond market means that you're going to get a lot more volatility. You're going to get volatility shocks coming through credit and equities.
Right.
Again, it's one of these, very hard to sort of establish kind of a real true sense of what that message is. But at the same time, it just tells you there are risks out there.
Right.
So I think the curve can normalize even in a volatile environment.
Okay.
But, we have to see.
We got to run. Hey, thank you so much. So super smart reporting. Bloomberg News rates reporter Michael McKenzie on Zoom in New York City. You mentioned...
Yeah, you too, Paul. Cheers.
Take care.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 3:21 on Wall Street. We check the markets for you all day long here at Bloomberg. Just about 40 minutes till the close. We are higher. Dow, S&P, and NASDAQ all higher, especially S&P in focus with that new intraday record high, which it is holding on to right now. The Dow is up about 1%, 392 points higher, pretty close to session highs. The S&P 500 up 1%, almost 1.2% better by 55 points, 48.35 right now. So that is significantly higher than the 48.18 that we had as the previous intraday high. If we close at that level, we will see another record. The NASDAQ higher as well, up by 1.5%. Spot gold right now, it is higher as well. The yield on the 10-year right now, 4.15%. And NYMEX crude down about 0.3%, 73.82 a barrel. Brian Vendig, president at MJP Advisors, says there are just a lot of opportunities in sector investing right now. He says try healthcare.
We have a demographic shift that we know that is going to continue to play out in the United States. The baby boomers, they're not getting any younger. There's still demand for services and care that's out there. So even looking at some of the larger healthcare networks, healthcare providers, insurance providers, I know they've had a rough week this week when considering concerns around Medicare costs, but those that can execute and move through that, I think also are areas of healthcare that makes a lot of sense available.
And Vendig there on Bloomberg Markets. Health insurer Humana lower today and down more than 10% on the year, though. A lot of job cuts. Macy's cutting about 3.5% of its workforce. That stock is lower. Wayfair laying off about 13% of its workforce. Shares, though, of Wayfair, they're up about 10%. Sports Illustrated planning to fire a significant number of employees, according to News Guild. And shares of electric vehicle maker Tesla slightly higher this hour. That's ahead of what could be record quarterly revenue when the electric vehicle maker reports next week. Although, guys, Tesla is struggling with all the electric vehicle price cuts that we've been seeing lately. And those are some of the company stories, and that's your Bloomberg Business Flash. Carol and Tim.
Thank you so much for that update, Denise. Really do appreciate it.
We're going to stay with cars a little bit.
Yeah,
EVs,
let's stay with
right?
cars.
Yeah.
It does already seem like a theme of 2024 is the way that the American car buyer has cooled when it comes to electric vehicles. The latest is that Ford said it would reduce the number of workers making its F-150 Lightning truck as demand for EVs continues to weaken. Ford shares bouncing around early in the session on the news, off an earlier loss of 1.5%, now up nearly 2%, though the stock already down 8.4% so far this year. Carol, it comes a bit over a month after Bloomberg reported that Ford would cut production goals for the F-150 EV in half in 2024.
Yeah, it's a big move, right? So what happened? Less than 2 years ago, Ford CEO Jim Farley saw the electric F-150 Lightning as a bet that the company was kind of all in terms of its way forward. Ford's biggest move, in fact, since Henry Ford ditched the aging Model T to make way for something new. Our go-to when it comes to things on Ford and really what's going on in the EV space is our own Keith Naughton.
Yeah, he actually wrote a cover story for Bloomberg Business Week back in April of 2022 that featured the Ford CEO and the company's massive make-or-break bet on EVs. And since then and before then, he's been chronicling the ups and more recently the downs of Ford's transition to EVs. He joins us on Zoom from Detroit. So Keith, it's good to have you back with us. It's always good to chat EVs with you and what's going on in the environment. I went back and read that April 22 cover story of Jim Farley and the debut of the F-150 Lightning. Give us sort of the postmortem here. Is it too early to say that this was a bet that's gone wrong?
It's probably too early to go that far, Tim, but certainly it has not worked out the way Ford imagined it would. And, you know, one of the comments from Jim Farley back around the time of the F-150 Lightning introduction kind of rings ominously now. He said this will be a test of acceptance of electric vehicles in America, because of course the F-Series truck is America's #1 selling vehicle. So if you can't sell an electric version of that, is America ready for EVs? Well, it turns out they're not as ready as Jim Farley and many others in the auto industry thought they would be a couple of years ago. You know, the EV sales growth rate has really slowed down. Now, EV sales are still growing. We need to be clear about that. They're growing faster than the market. But last year they grew 47%, and this year UBS says they'll grow about 11%.
So I know we've gone round and round with you on this, but I'm going to go back there. So Keith, it's just a matter of time or timing, and so maybe the timeline is a little bit longer on the ramp up to EV. Certainly here in the United States, globally we're seeing certainly a pickup, but help us out here.
Yeah, it is a much stronger take rate in China and in Europe. But there are some, government incentive reasons for that, particularly in China. If you want to get an EV in Shanghai, well, your license plate is free. If you want to get an internal combustion engine vehicle, you have to pay $12,000 for that license plate. So China has used a real stick approach to become the world's largest EV market. Here in the United States, consumers are saying prices are still too high. The average price of an EV is still around $60,000, even after all the price cuts. And that the charging network is just not robust enough. People are worried about being left stranded by the side of the road with no charger nearby.
Yeah, and certainly the cold weather around the country hasn't helped the image or the thought of that, I think, for a lot of people. Keith, what do you think needs to happen for the U.S. to actually consistently sell more EVs and make sure that it is a country that's moving in that direction? Because I think what's most striking about the news that we got earlier today that you reported is that Ford's actually redirecting some of the money that was going to EVs and actually to build more of the new Ford Bronco, which is an internal combustion car.
Yeah, exactly. We are going back to gas-fueled cars at Ford with this announcement today. They are cutting a shift at the electric vehicle plant, and taking some of those workers and moving them over to the Bronco and Ranger pickup truck plant, which are both internal combustion engine vehicles that are selling well. And those are the vehicles that make money for Ford. So they need them to sell well so they can finance this EV future. It's this very delicate balance. I think Americans have to be convinced that they don't give up anything to get an EV, but instead they gain something. And right now they see, convenience being sacrificed because it takes longer to charge than it does to gas up a car. And it's just simply more expensive.
Hey, I'm just thinking about how hard this has got to be for Jim Farley on this whole idea of balancing production to meet customer demand and still being committed to a future with EVs, but also as a publicly held company, knowing that every quarter they're going to have to answer to their investors. So it's not going to be easy, is it?
No, and they are losing billions on EVs. In fact, last year, they initially said they expected to lose $3 billion on EVs in 2023. And then they had to increase that to $4.5 billion, $4.5 billion. And now they're maybe even worse. So it's a very difficult business case to make, particularly when the uptake is going slower than you expected, because they counted on volume to really kind of turn it around.
Keith, is this a Ford problem or is it a systematic wide problem? Like, is it affecting the other companies the same way that it's affecting Ford?
The EV slowdown is affecting everybody. GM has delayed the launches of a couple of EVs. Everybody is sort of scaling back their EV spending. Even Elon Musk is cutting the prices of his bestsellers to try and stimulate sales, but is still seeing market share losses and margins getting compressed. So there is an overall slowdown in the U.S. EV market.
But is it hitting Ford harder?
Yeah, and so to the Ford point, so Ford got out there early, particularly with the Lightning, by essentially converting the gas-fueled F-150 into an electric vehicle. They have a second generation of EVs coming that will be ground up, that were designed from the start as electric vehicles. And they promise those will be just really advanced, lots of digital features that consumers will love. Those don't come till 2025 or 2026. And they were just downgraded this week by UBS, who said that the EV payoff is going to take longer than expected for Ford.
You know what I don't understand? We're coming off of COP28, right? What happened in Dubai. And the big agreement that everybody pointed to, this transition away from fossil fuels as part of a global stock take, if you will. It was the first time that COP mentioned this. So it's out there, and I think about the regulatory push also. So it means we're going to get there again, or like, I don't know. I try to kind of make sense of it, if you will, Keith, that we've got stuff like that
I think
going
it means,
on. Yeah.
I think what you're seeing is that it'll just take longer to get there because, you know, government regulation or guidance can only go so far. It becomes a pocketbook issue for consumers. They're just not going to shell out $60,000 for an electric vehicle when an average, you know, internal combustion engine vehicle costs $13,000 less.
Hey, before we go, 30 seconds. Who is buying or who are buying EVs here in the United States? What's the demographic? And just quickly, if you can, sorry.
Yeah, it is primarily men, wealthy. They're buying it as an extra car for their household rather than as their primary daily driver.
All right, good stuff, as always. Listen, thank you so much. Always appreciate it. Have a great and safe weekend. Bloomberg News auto reporter Keith Naughton joining us there. And again, Ford shares, if we take a look there, higher on the day on this news, up about 1.5%, off their earlier highs of 2%, but also off their lows of the day when they were down about 1.5%.
And if you want some good weekend reading and maybe you missed it the first time around, go check out Keith's cover story about Jim Farley and Ford's bet on EVs back in April of 2022. It's on the Bloomberg terminal. And it's at bloomberg.com/businessweek.
Yeah, that cover story was a great one.
Yeah.
Yeah, I think it's important. And I love kind of also hearing from Keith that, you know, longer term, the commitment is still there and that's the direction. It's just, again, maybe taking a little bit longer, especially here in the United States.
Well, let's stay in the United States and get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. President Biden signed a short-term spending bill today to avert that government shutdown. During a White House briefing, Press Secretary Karine Jean-Pierre pressed Republicans to work on a long-term spending plan.
House Republicans must finally do their jobs and work across the aisle to pass full-year funding bills that deliver for the American people and address urgent domestic and national security priorities by passing the president's supplemental request.
Again, that's White House Press Secretary Karine Jean-Pierre. The bill will fund the government into March. The Biden administration is forgiving nearly $5 billion in student debt for about 74,000 Americans. The White House says more than half of borrowers eligible for the debt relief are teachers, nurses, firefighters, and others who've been on the Public Service Loan Forgiveness Program for 10 years. This is the latest round of debt cancellation since the Supreme Court struck down the president's sweeping student loan forgiveness program. Harvard University's interim president, Alan Garber, is stepping up scrutiny of hateful behavior after his predecessor resigned amid questions around how she addressed anti-Semitism on campus. The school has formed two new presidential task forces, one on anti-Semitism and the other on Islamophobia and anti-Arab bias. Today marks National Popcorn Day. Movie theaters across the country are celebrating with special offers. AMC Theaters is giving moviegoers unlimited refills on every size of popcorn all day. Cinemark will be discounting medium and large popcorn by $2. Dine-in theater chain Alamo Drafthouse will be giving out free bowls of popcorn with the purchase of a movie ticket. Those who track these things say Americans consume around 4.5 billion quarts of popcorn at movie theaters and other live venues every year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 3:40 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks powering higher. Now over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon. U.S. stocks with a bid as the S&P 500 trades to an all-time high. The Dow's currently up 381 points. S&Ps are up 55, while the Nasdaq rises 1.6%. The U.S. 10-year yield at 4.15%. Gold is trading higher by 6. Oil is in the red, but Bitcoin is climbing by 2.4%. Among the main 11 S&P sectors, leaders were tech and the financials. Only utilities and consumer staples were in the red. And leaders to the upside in the Dow, Travelers and Intel, while UNH fell 2.2% and led to the downside. After earnings, State Street rose 2.3%, and in the airline space, Spirit Airlines rose 22% after reaffirming support for the JetBlue deal. In other news, Sam Altman seeks to raise billions for a network of AI chip factories. And wrapping things up, NVIDIA hit a new all-time high and is closing in on $600 a share. Live from the first word breaking news desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg, just type SQUAK if you want to on your Bloomberg terminal. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, well, it's that time to drive to the close. And before we do that, I want to get to a headline. A redhead crossing the Bloomberg terminal. Apollo Global Management considering making an offer for National Amusements, Inc. That's, of course, the Redstone family company that controls film and TV giant Paramount Global. This by our own team, including Lucas Shaw, Ryan Gould, and Michelle Davis.
Yeah, interesting, too, because you're seeing Apollo Global hitting a record in today's trade. So it's been actually moving up in the session. Not that that's necessarily related to this news, but it's up about almost 2% today.
We should note that Apollo is one of a number of investors, both wealthy individuals and professional money managers, that have reached out in recent weeks to BDT and MSD Partners, the investment bank advising the Redstones. That's according to people familiar with the discussions.
All right, so something to track on this Friday. We're tracking a lot on this Friday, including an equity market that is pretty much at its best levels of the session. So we've seen really investors, certainly on the equity side of things, come back. NASDAQ, as we heard from Denise, really the outperformer, up 1.6%. We saw this trade yesterday. So let's get to it. Let's get to our Drive to the Close guest. Back with us is Doug Sioka, CEO and partner at Kavar Capital Partners. They've got over $1 billion in assets under management. He is on Zoom from Leawood, Kansas. Hey, Doug, so nice to see you. I can't remember if we've had a chance to say Happy New Year. It's already been kind of a busy 2024. How are you?
Yes, I'm great. Happy New Year to you guys as well. Thank you for having me on.
Is it cold in Kansas?
No, it's frigid and ridiculously freezing in Kansas. It's 4 degrees right now and dropping.
Where is it colder, Buffalo or Kansas?
Kansas, yeah.
Okay.
It looks for the game on Sunday. So the Chiefs will be up in Buffalo. It looks like 22 and no precipitation. So it's going to feel balmy after the game last weekend when it was minus 27.
It's a big game this weekend. And I got to say, Doug, it's so great that Taylor Swift came along to help out the Chiefs and really get Travis Kelce on track. I bet you're really happy that she came into his life.
I am. I am happy for her. I'm happy for the city. It's been great to have her around town. And he's very visible. She's got a bit of a cloak of protection around her, which is necessary. But she's been seen around town, and it's been a lot of positive buzz in the city, and we love it.
Well, talk about the game. Patrick Mahomes, it's hard not to like this guy, even if he's not your team. Every time he's in a Super Bowl, I love watching. He's just this great little player and just seems to pull it out all the time. But speaking of the Chiefs and the team and their strategy, my understanding is you think investors should take note of what they've been up to as well.
Yeah, I mean, it's a kind of a little corny take on what's happening at Arrowhead Stadium, but our town tends to sort of evoke the character of their sports teams, and I've kind of made a little bit of it's probably a bit of an extension, but the Chiefs have some characteristics that they also share with kind of fundamental portfolio management of the prevailing markets. And right, we've been saying, look, you've got to have good defense, and that's been kind of the heart and soul of the Chiefs team this year. in the bond market, right, in this silly analogy, right, it's offering very stout defense, right? You've got sound portfolio protection, robust income. You've got to have secondarily, kind of like to your point, this Mahomes magic leadership. We need to have some tried and true, probably tech-centric growth stocks, embracing AI, distancing themselves from the competition, and exhibiting incredible agility in a fast-paced industry sector. And you've got to, thirdly, you've got to have sound diversification, right, in your portfolio, and it's certainly on the football field. And you've got to be able to score in multiple ways. Expectations are high, playbooks well worn at this part of the season. So you got to pull out all the stops, and having someone like Andy Reid as our head coach, there's never any lack of creativity in offense. That's for sure.
Doug, do you like football?
I love football.
Okay,
yes.
I thought so. Okay.
Just wanted to make sure.
Just wanted to make sure. Yeah. Hey, can you connect the Chiefs season at all to the key themes to watch for 2024? Because I know you're watching certain elements here, including geopolitics. What's going on with rates?
Absolutely, Tim. And like everybody, right? Like interest rates are the overriding sort of priority one theme of 2024, as they were in 2023, as they certainly were in 2022. So interest rates, earnings, geopolitics, and domestic politics, sort of cross-pollination there. And then we really feel like in 2024, we're going to see an appreciable increase in M&A activity. So I'm happy to talk about any or all of those, the four-pronged thematic outlook for sure.
Can we go to interest rates? We just talked with our Bloomberg News rates reporter, Michael McKenzie, and this whole idea of, bond traders really very closely watching maybe the treasury curve here in the U.S. getting back to normalization, this whole idea of, no longer an inverted yield curve and those longer durations moving up. But having said that, the path to getting back to normal, the question is, does the longer end of the yield curve go higher or does the shorter end go lower? And I am curious what your take is on it, because it means different things.
Yeah, so throughout last year, Carol, we saw what was called a bear steepening, right? And we saw as the short end came up and the long end, I should say that the long end barely budged. And that sort of unwound kind of going into the midsummer. We saw the pullback in equity markets when the expectation was, hey, the Fed may not be done, right? There was a lot of mixed messaging coming from some of the Fed governors on their speaking tours. We've actually now seen some more of a bull steepening that's taken place. Well, the expectation in the market, and it's begun to dissipate, right, from definitely putting in 6 cuts next year to maybe more like 4.5 or 5, if that's possible. So you've seen the expectation that the Fed might not be cutting as much as had been anticipated. So the 2-year has really been pegged, and all the action has been on the longer end. Now, we did see some normalization, even on 2s and 30s earlier this week, right, where we finally saw that was kind of a refreshing deal. We've gone from 98 basis points of steepness to 2s, 10s. Now we're just at like 23. So we're seeing the right kind of steepening that's taking place. And why is that, right? Because everyone knows the Fed is done, right? How quickly the Fed cuts is really open for debate. I saw an interesting interview this morning with Austin Goolsbee. What he was saying, which I thought was really interesting, is the investors are hinging on the words of the Fed, and they need to be hinging on the data. But at the same time, we will still raise rates if we feel like the data is inconsistent with the general trajectory of inflation. So that was a little bit of mismessaging as well. But what the market is trying to do is ascertain 2.5 to 4% GDP growth. Boy, that's pretty good.
Yeah.
A labor market that's finally coming into balance. Boy, that's pretty good. Certain industries in the stock market, they're just starting to hit kind of a sweet spot of the upswing of their profit cycle. So you can see the soft landing scenario with rate normalization without seeing like a widening of the normalization, but just getting where we have opportunities to pick up term premium. That's going to be really reassuring in the face of declining inflation.
Well, certainly something to think about as we head into the weekend and get ready to watch a lot of football. That's what I'm going to say. Hey, listen, be well. Great to check in with you. Doug Sioka, CEO and partner at Kavar Capital Partners. As we mentioned earlier, they've got over $1 billion in assets under management. He's joining us on Zoom from Leawood, Kansas, where it's getting chilly.
Doug, are you going to go to the game?
No, the game's in Buffalo.
I know, but you could still go.
Yeah, could still go. Okay. No, I will be here. Yeah.
The Kavar jet might take you?
Oh, now you're talking. Once we get let's fire it up.
Doug, good luck this weekend. Appreciate you, as always, joining us. Good luck.
Happy New Year.
Thank you.
You too. Happy New Year. All right, everybody. We've got just about 10 minutes left in the trade. We are holding on to our gains here on the equity side of things. NASDAQ, the outperformer. Record on the S&P. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. Spirit Airlines shares, they are surging. That's after the company reaffirmed support for its JetBlue deal. We get more on what's happening from Bloomberg's Ann Cates.
Spirit Airlines says its deal with JetBlue Airways remains in full force and effect as the carrier explores ways to shore up liquidity. The comment comes after a court decision this week agreeing with the Justice Department and blocking JetBlue's planned buyout on concern the merger would hurt consumers. Spirit says it is assessing options to refinance 2025 debt maturities and also says fourth quarter revenue will reach the high end of its forecast after strong winter holiday bookings. Some investors have been concerned Spirit would struggle after the merger fell through. Ann Cates, Bloomberg Radio.
All right, thank you. And the publisher of Sports Illustrated magazine, well, it is apparently planning to fire a significant number of employees, this including possibly all of its unionized staff. And this word comes to us from the News Guild in a post on social media. Existing home sales falling by another 1% in December, and that caps really the worst year for housing since 1995 when you think about it. That's according to the National Association of Realtors, but things may be looking up. Pending home sales. Contracts signed, well, those rose 4% in December, the biggest increase in 2 years. That is according to the real estate site Redfin. And move over OpenAI and ChatGPT. We're hearing Google DeepMind scientists are in talks to leave the company and form an AI startup in Paris. And those are some of the company stories we are following for you this hour. I'm Denise Pellegrini, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
Yes.
You know what's expensive?
Chicken fingers?
No, I was going to say luxury condos in Dallas.
We have to. Okay.
Chicken fingers are not expensive, but if you sell enough of them, you become a billionaire.
There we go.
Yeah, there we
Thank
go.
you for that connection.
No problem.
Hey, everybody. This is the most read story in the Bloomberg today. On this Friday, over the past 8 hours, Todd Graves, he's the founder of the popular chicken finger chain Raising Cane's Restaurants.
I've never been.
Apparently, I was looking, they're in like almost 40 states and territories, over 500 cities.
Next time we're on the road, we got to go to one.
I've never seen them.
I've seen
The
them.
most are in Texas, though.
Okay.
So maybe we need to go to Texas.
We go to Texas.
Yeah, kind of interesting. Well, anyway, Todd Graves, he's the founder of this popular chicken finger chain, Raising Cane's Restaurants. He bought a penthouse at a luxury condo building under construction in Dallas. What's interesting is that city, I feel like Texas overall, but Dallas in particular, we keep talking about in terms of people moving there, companies moving there, financial firms upping their presence there. And look, so is Todd Graves.
Okay, so he's taking the top 2 floors at the Knox Street project. This according to a person familiar with the matter who asked not to be identified, disclosing private information.
So is a guy on the side of the street, hey, listen,
you know who's living
don't
here?
tell me who's, but you know what Todd's doing?
No, that is not how our reporting works. We vet sources better than that,
Confirm
I will say.
it.
Yes.
Several sources, trusted sources. Yeah.
Exactly.
All right.
We don't actually know how much it went for, but a penthouse on one floor of the building was marketed for $25 million a few months ago, according to a person familiar with the matter. No official price was disclosed for Graves' purchase, and the total could be far higher.
You know, this is very much New York City standards, right?
In terms of price, yeah.
Yeah, a price in the double-digit millions, expensive even by New York City standards. In the fourth quarter, median sales price for a luxury Manhattan condo was about $12.5 million, according to the team over at Miller, Samuel, and brokerage Douglas Elliman Real Estate.
That's a lot of money.
Still thinking it's a lot of chicken fingers.
Okay, so Graves opened the first Raising Cane's back in 1996. He's got a net worth of $7.2 billion due to his nearly 90% ownership interest in the closely held business, according to the Bloomberg Billionaires Index.
Fascinating story. You can check it out. It's on the Bloomberg terminal, also at Bloomberg.com. Other luxury developments underway in the Dallas area. There's a bunch going on. What?
Okay, he collects historical artifacts. He owns a 66 million-year-old Triceratops skull that was found in Montana.
That is so cool.
That's going on in the penthouse.
Oh, my God. All right, don't go anywhere, folks. We're counting you down to the close. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Bonnie Quinn. We're joined right now by our colleagues Carol Massar and Tim Stenovic, a global simulcast as we count you down to the bell and beyond. A hearty welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and YouTube. Record highs pretty much across the board here today, Carol Massar, at least for the Dow, at least for the S&P, and of course for the NASDAQ 100 as well.
Yeah, it's a big day. Certainly one for the bulls here. I was curious, after that strong sentiment, U.S. sentiment, consumer sentiment number this morning, I was curious about consumer discretionary names, and we're seeing some outperformance and among the top gainers. The group overall just up about 1.3% today.
Okay, the question I have is if companies can live up to the lofty expectations that investors have for them moving forward. And certainly we'll find out next week. We're in the midst of earnings season. We got a handful of big companies reporting next week, and then of course the week after as well. Those include Tesla, a few airlines, and Vonnie, and some of the ever important railroads as well.
Yeah, exactly. And if you look at the breakdown of what's higher, as Romaine said earlier, semiconductors really helping to a certain extent, up 4.4% as a group in the S&P 500. And, things like managed healthcare, that after the Humana results, down 2.5%. So some of this will hinge on how earnings perform next week.
The thing is, you have to kind of go back. When you talk about the broader market here, and you go back to sort of what we saw in late October, sort of when stocks kind of bottomed out here, and the run-up that we've had in the major indices since then, it has been nothing short of phenomenal. And of course, as we sit here at 4 p.m. on a Friday afternoon on this very January 19th of 2024, we finally get the culmination of, I think, what a lot of people have said should have happened a long time ago. 48.39 and change on the S&P 500. It takes a while for these numbers to settle, but no matter where they settle, that will be a record high. A 60-point gain or so on the day, 1.2% on the S&P 500. The other indices not to be left out. The Dow Jones Industrial Average up 1% to a record high. The NASDAQ Composite up about 1.7%. We should point out the NASDAQ 100 up about a similar amount at a record high. And the Russell 2000, let's take a quick look at that. Of course, that still's got a little bit of a ways to go before it gets back to a record high, but still posting a gain on the day of about 1%.
Yeah, it's interesting after kind of a tortured start, certainly on the equity side of things here in 2024. It does feel like, as of late, and certainly this week, that investors are willing to take on risk here when it comes to the trade. Having said that, Vonnie, S&P 500, a little bit of a deeper dive. We are definitely seeing that risk on trade. 371 names in the index, higher today, 131 to the downside.
Yeah, exactly, Carol. And as I mentioned, semiconductors and semiconductor equipment representing many of those higher names, but also regional banks. It'll be a little bit of relief for some of those regionals as they start to report earnings and so on to get some upside. Many of them are down 20% or more year over year. And then to the downside, as I was saying, managed healthcare not doing so well. And we also have a lot of the healthcare stocks actually lower on higher medical costs.
Just to reiterate, if you're just joining us, the S&P 500, folks, closing at a record high for the first time in 2 years. So a significant move certainly taken out here on this Friday. All right, having said that, let's get to some of the individual gainers that were helping to push the overall market higher. This one, I don't know if this has been on your radar. If it hasn't, it probably should be. Supermicro Computer, I kind of pulled Tim over and I'm like, have you seen this stock? It has been year after year after year high performance, up 36% in today's session. It's up about 45%, I think, year to date, largely because of the move today. Last 5 years, since January 1 of 2019, it's up nearly 2,900%. It's a computer hardware maker. It put out some preliminary financial results. It beat expectations. The company's saying it expects to exceed its previous guidance. Analysts weighing in, including Barclays, their analyst over there estimates that Supermicro likely shipped 9,000 AI servers in the December quarter alone, thanks to improving graphics processing unit supply and strong AI demand. They expect another full year 2024 guidance increase when Supermicro reports results later in this this month. Is this a name that's on your radar?
Oh yeah, it's been on our radar for a while. I mean, they're a big deal. I mean, at least if you're building a data center or something like that. But I mean, yeah, 35% seems a little extreme. But I guess when you look at some of the valuations out there and the promise of AI, I guess maybe it makes sense.
Yeah, exactly. But it's year after year after year. Just real quickly, PayPal, a top gainer in the S&P 500, NASDAQ 100, up about 6%. No real news, a lot of volatility around this stock, a lot of analysts weighing in, but it was an outperformer today. And Endeavor, just wanted to mention, Group Holdings, up about 6.6% today. You know, Romaine, your agents,
We're not supposed to talk about that on air. I mean, don't worry, my feature film will debut in 2025. But just real quickly, we should point out too. I mean, in all seriousness, you talk about the moves that you saw in those tech names. With Meta basically going back to a record high, Microsoft going back to a record high, and in fact, most of those big cap tech stocks, and even some of the mid-tier ones like Supermicro, if not at a record high, now within a whisper of that as well. So this really has been, at least for this week, a relatively broad-based uplift.
It has, but if we think about Meta Platforms, for example, or some of the other big tech names, it's certainly been a bumpy road getting here. I mean, that company is up about 70% since those lows about 18 months ago, and they laid off a lot of people and did a lot of restructuring to get here. So it has certainly been a rough road. Hey, speaking of a rough road, there were some actual decliners in the S&P 500 today, and outside of the S&P 500 as well. I do want to start with one of the worst performers in the S&P 500, Albemarle. It is one of the largest lithium producers in the world. Shares falling for 8 days in a row. It's down on the softness that we're seeing when it comes to the EV market. We saw the Ford news earlier today. We know what is happening when it comes to the way at least U.S. consumers are thinking about EVs. The company's customers include car companies such as Ford, Tesla, Volkswagen, Mercedes, and more. And lithium, of course, a key component when it comes to those EV batteries. Let's talk about PPG. Shares falling in PPG Industries today. It's the paint and coating maker. Reported yesterday its first quarter adjusted earnings per share came in below analyst estimates. Wall Street analysts also said the guidance implied a slow start to the year. Shares finishing that down by about 2.5%. And then did you guys see what happened to iRobot today? This is all a regulatory issue. Concerns that the Roomba maker, iRobot, that Amazon acquisition remain expected to be blocked by European Union antitrust regulators over concerns that the deal will harm other robot vacuum makers. Shares down.
Really? How many of those are there?
That's why I'm laughing.
Okay.
I mean, I know there's like some knockoff ones. Yeah. We have a knockoff Roomba at home.
Oh, yeah. Does it actually does it only clean half the house or something?
Well, the Roombas are too expensive, so we got the cheaper one.
I love this quote. EU interim competition chief Didier Reynaud said Amazon had to pledge fair treatment to all robot vacuums offered on its platforms.
The antitrust regulators will not rest until the robot vacuums are all treated equally. Yeah. But in all seriousness, closing down 27%.
And speaking of competition too, did you see Celsius? That's of course the big energy drink maker, down significantly on the day, worst day they've had in a year and a half, and that was on the back of a downgrade because of competition in the energy space. Let's talk about yields, because that was a big part of the story this week. It was a big part of the story last week, and in fact, what you're looking at right now is kind of a complete reversal. Last week you had a drop of about 24 basis points on the 2-year yield. This week, we had an increase of about 24 basis points on the 2-year yield. So call it a wash. You're looking at the daily numbers here, up about 3 basis points on the 2-year. The rest of the curve shifted slightly lower, but on a weekly basis, everything is higher than where it was. And that gets us to this idea here of whether that is going to actually factor into, well, how people look at today's rally when they come back, Carol, on Monday.
Hey, and speaking of good news, there's some good news for Mr. Gorman over at Morgan Stanley. We know he's moved out of the CEO role, but James Gorman, Morgan Stanley up in their pay, his pay specifically, 17.5% to $37 million in his last year as CEO as that company. So certainly was at that company for a long time, made a lot of changes, but nonetheless, 2023 was a pretty good year for him.
Okay, well, let's start thinking about what happens next week and then the week after, of course, when we hear from the Fed. We did hear from a lot of Fed speakers over the last 2 weeks. The blackout period begins next week, so we're not going to hear from Fed speakers next week, so we're going to have to read different tea leaves. But I think it's important that we're going to be hearing from a lot of different companies about any softness that they're seeing with the consumer. Again, I think that, since we're seeing equity markets at all-time highs for the first time in 2 years, it's going to be really important to hear if investors' expectations are going to be met when we hear from some of these consumer companies.
I think when you look at least the numbers that Bloomberg compiles in terms of expectations for earnings in aggregate here, they are relatively ambitious, if you will. Most people seem to think that we are going to have a very good year overall. And if we start to see that in those fourth quarter numbers, and more importantly, the guidance that they give going forward, does that add more fuel to the rally, or is that already priced in?
Yeah, and I mean, every time we hear from a Fed speaker, as you pointed out, Tim, we have fresh data to sort of listen to them with. And there was a raft of data this week, much of it good and much of it related to the consumer. How does that change each person, each voting member and each non-voting member's opinion on when they should cut first, Carol?
Yeah, I think we're data dependent. We know that. We're going to go from data point to data point. Having said that, what happened with Ford today, we know that they're going through these changes. They're still committed to the EV market, but they've also got to stay true to the way, cars have been for such a long time.
time, take a look at that stock. What a range. It was down 1.5%, but finished up almost 2%.
Range, I like how you did there.
Thank you. But I think the point is that companies react quickly to what is going on in the market, as much as it means really sorry for workers that lose their jobs, but I think they are kind of beaten up very quickly by the market if they don't do what they need to do. And somehow things cyclically kind of seem to move through pretty quickly.
Just before you go, Carol Master, and I know you've got a really busy day
I
ahead
think
of
we
you.
need to stop our mics and go. No, I think we have to
That $37 million on Morgan Stanley for Gorman.
Yes.
Interesting too. They're also saying that Ted Pick, his starting salary, his base salary, that is going to be at 1.5. Obviously, that was pretty much in line with what Gorman made as a base salary. So the big question is his stock compensation going to rise to the same level that Gorman's did?
That's maybe some weekend homework, huh? To think about that?
Well, I mean, I just gave it to you now.
We got to go.
Where are you
All
going?
right. I don't know what I'm doing this
She's
weekend.
watching the game on Sunday.
I am watching the game. Go Kansas City. Can I do that? All right. That's a wrap, guys. Have a good and safe.
A Kansas City fan. I thought you were from Jersey.
I am.
Have
but
you heard of Taylor Swift?
Are the Giants there? No. All right, everybody. Have a good and safe weekend. Stay warm. All right, we'll see you guys, everybody, on Monday.
It takes every kind of people to make what life's about, yeah.
All right. Well, life is about a lot of things when it comes to investing, and it often means transitioning. We talked about that kind of with the EV space. There's a lot going on. There's a term that I came across in kind of getting ready for this segment, transition finance, which is shaping up to be one of the new year's most important subjects for anyone professing to care about the climate crisis, Tim.
So it's distinct from green finance, which generally targets so-called climate solutions like wind farms or battery plants. Instead, it's loosely defined as investments mainly in industries and infrastructure that help drive efforts to achieve a net zero economy.
Exactly. So we've discussed about a lot of these things, and we've also talked about kind of the rethink among investors when it comes to ESG investing specifically. A decline in the U.S. has resulted in an overall slide in the global market for ESG investing. A recent assessment by the Global Sustainable Investment Alliance, they provide updates on the size of the market every 2 years. Well, the 2022 review, folks, published in late November, shows that investors had 30.3 trillion in sustainable assets. That's down from 35.3 trillion in 2020. And in U.S., you really saw a big drop. Sustainable assets falling to 8.4 trillion last year from just over 17 trillion 2 years earlier, according to that report. A lot of it was attributed to a change in methodology used to calculate the numbers. But we are seeing investors kind of rethink and retrench a little bit.
It's not the first time we're hearing this either.
No.
So here to talk emerging trends in the ESG space, we got Maureen O'Brien, SVP of Corporate Governance at Siegel Macro Advisors, U.S.-based investment consultancies with combined advisory assets exceeding $500 billion. She joins us on Zoom. Siegel Macro Advisors, I should tell you. I read that incorrectly. I'm sorry, Maureen. So tell us a little bit about the study and the findings here.
Yeah, thanks for having me on. So every year, Siegel Macro Advisors surveys our top investment managers on emerging ESG trends. This is what they're doing in-house, how they're tracking emissions, how they're looking at DEI, whether they're continuing to have a hybrid model. So we asked them a variety of questions and then put those results together in a summary report that we put up on our website.
All right, so what were some of the summary, and why do you think it's important to kind of remind people of what's going on?
So on climate, as you guys were just talking about, we are seeing some movement there of investment managers who are tracking their emissions internally and then also tracking emissions for clients. So what that's telling us is that more retirement funds, benefit funds are seeking to establish their carbon footprint and then see how they can reduce that footprint over time. So we're seeing more than a majority of investment managers start to track those emissions and look at net zero targets, which is a change that we're seeing incremental progress on. Another big finding in the survey this year is on DEI. During the Black Lives Matter movement and the follow-up to that, we saw a lot of investment managers making announcements about hiring and promoting women and people of color. And unfortunately, the survey results this year showed that those gains have essentially disappeared. It looks like women have gone down as an overall percentage of the workforce and a percentage of the C-suite. And particularly Black employees have seen big reductions in the overall workforce, and a 50% decrease of Black representation in the C-suite is what the survey found this year.
Hey, Maureen, when Carol and I talk about this, we always go back to this one idea, and it's actually makes sense because it's earnings season. When we hear from companies and we hear what moves a company's stock during earnings, it's top line, it's bottom line, and it's what the outlook is. They're not talking about ESG. That doesn't move the stock.
It never comes up.
It never comes up in the context of it actually being something that they're talking about with relation to the company's stock price or the company's business. I don't want to say never because it has before, but mainly that's what we're hearing. Does that change? Do we ever start to see some sort of metric that actually moves a stock relating to what you're talking about?
Part of the difficulty when we talk about ESG is that it's not one thing. So there's a lot of discussion about ESG in the regulatory environment right now and among investors. But essentially, it's being talked about as sort of one concept, and it's really many things. So aspects like worker rights and climate change are going to affect how successful companies are. I don't think it's a clear line between there is a good DEI program and then the next day the company is shooting the lights out compared to the competition. These are inputs and factors that do have an impact over time, but they are not overnight market movers.
I guess, too, it's just, it all seemed to make so much sense early on. And I think, the original idea of ESG was kind of the vulnerability, of companies, publicly held companies, when it came to ESG metrics, right? What it meant for them. I don't know whether media, the narrative changed, and it was like kind of this doing good thing. And I'm not saying that they can't be both. But having said that, all the money that has gone into ESG investing, Maureen, what can we turn to say, okay, it's really improved things? Because you just talked about that things haven't, in some ways, gotten better.
Mm-hmm. Yeah, I mean, first of all, we used to not know, right? We just didn't have a lot of data. I mean, the only required ESG information out there was how many employees you have. So not even a breakdown of demographics, for example. But we didn't have any data around carbon emissions. We still don't have a lot of data around that. Workplace issues, how companies are doing with their turnover rate. Companies will often say employees are their most valuable asset, but there was no required measurement of that asset apart from where the operations are and how many people work there. So a large part of ESG has just been trying to get that data available. You've seen a huge increase in the number of companies that have sustainability reports, that are joining up for organizations like CDP, the Climate Disclosure Project, and other initiatives where they're voluntarily providing this data, but it's still not at the point where the data is as easily comparable as it is with financial data. So that's a big part of the problem. But that is changing. The SEC has a pending climate rule that is looking like it will require lots of information on climate. And so once companies begin reporting on that, it's much easier to do that evaluation of who are the winners and losers in this climate transition.
And we want to share from our audience, though, some of the stats I think that you talked about earlier and reminding us how things haven't changed. If you look at the workforce, it's still predominantly white. So it's 63% of the individuals who are working are white individuals. If you look at race, right? Again, white, predominantly, about 79%. If you look at...
That's in the C-suite. So that's
the C-suite, forgive me.
So that's, the people making the decisions. It's 3% black, 79% white.
Right, exactly. Overwhelmingly. And then again, gender, which you talked about earlier. Again, C-suite gender composition. You're talking about only 26% are women. I've been doing this a long time and nothing's changed. Just got 10 seconds here. What do you hope people take away from this conversation? Please, if you could be quick.
Yes, it's important to set goals, track progress, and be public about the journey. Without intentionality, the historical trends do not reverse themselves.
All right. And there is something to having, like, the importance of data so that you can actually understand what's going on.
We're talking about it now.
Yeah. Well, we've talked for a long time. But to see the numbers, the concrete numbers. Maureen, thank you so much. Maureen O'Brien, Senior Vice President of Corporate Governance at Siegel Marco Advisors from Chicago. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. We check the markets for you all day long here at Bloomberg. S&P 500 closing at a record high this Friday. This is for the first time in 2 years. Also, we have Meta Platforms, Facebook parent, gaining to close at the highest on record. The Dow up more than 1%, better by 395 points at the close. The S&P 500 closing at that record 4839.81. That's after gaining 1.2% 59 points. The NASDAQ, the biggest winner percentage terms on the day, up 1.7%. Strong consumer sentiment a theme today. U.S. sentiment this month hitting the highest since 2021, exceeding expectations. That says these inflation concerns really waned, according to the survey. But Tony Crescenzi, he's market strategist, portfolio manager, and member of PIMCO's investment committee. Well, he says the Fed has not achieved price stability yet. And he says the Fed might not cut rates as soon as you think.
It has to be cautious about acting too soon, because the key lesson of history is to keep at it, as Paul Volcker said, and keeping at it is his book from 2018, until the job is done.
And Crescenzi there in the Bloomberg Surveillance podcast. The yield on the 10-year lower, 4.12%. Spot gold up 0.3%. NYMEX crude down almost 0.4%, 73.77 a barrel. And Apollo Global Management considering making an offer for National Amusements. That's the Redstone family company that controls film and TV giant Paramount Global. And there are apparently other potential bidders as well. And that's your Bloomberg Business Flash. Guys, back over to you.
All right, so appreciate it, Denise Pellegrini. Well, a billionaire couple is giving $100 million to Atlanta's Spelman College, which the women's school says is the largest ever single donation to a historically black college or university. The donation announced yesterday by Rhonda Stryker and her husband, William Johnston. She is the billionaire granddaughter of the founder of medical device maker Stryker Corporation. He is the chairman of money management firm Greenleaf Trust. They live in Michigan.
Spelman said it would use $75 million to endow scholarships. The rest of the money will be used for other purposes, including developing an academic focus on public policy and democracy and improving student housing, a sore point in recent years among Spelman's students.
We are so delighted to have with us to talk about this historic gift and what it is a historic year for Spelman. Dr. Helene Gale, she's president of Spelman College. She is on Zoom from Atlanta, and also with us, delighted to have here Bloomberg News higher education finance reporter Janet Lauren in our Bloomberg Interactive Brokers studio. Dr. Gale, congratulations. Thank you for giving us some time here. Can you talk to us a little bit about how this gift came up? How did Rhonda Stryker come to be a trustee at Spelman? And what's it like to receive the news of a gift of this magnitude?
Well, thank you, and thanks for having me on. Well, Rhonda Stryker is one of our longest-serving trustees. She was brought on by one of my predecessors over 20 years ago. And over the years, she and her husband have continued to contribute to Spelman and, have been incredibly generous donors. But this is clearly the largest single gift that they have ever given. And as you said in the run up to this, it's the largest single gift that Spelman has ever received and the largest gift to any HBCU. So it's pretty exciting and, truly a transformational gift that I think can make such a huge difference for Spelman, not only now, but far into the future.
So thank you again for coming. So tell us, how does this donation impact your endowment's longevity, especially when it comes to scholarships?
So, we plan to use 75% of it for endowing scholarships. We will obviously put that money to work immediately, and in a year or so there will be returns that we can use to start increasing our scholarships already. But as you know, endowments really what you can do with an endowment is to think about future generations. And so we look at this as the way that we can secure the future for bright, talented young women who want to get a Spelman education, but oftentimes are not able to because of financial barriers. So, we think this is going to make a difference for our students today, but also for the students of tomorrow.
Well, and I was looking at your most recent value of June 2022. It was less than $500 million, and then this gives you a huge amount of money more to invest. Can you talk about what that means for having, having that in the fund and to be able to build on it and to be able to do things like help students graduate and boost those rates and, help them return the next semester if there's trouble?
Yeah, no, totally. That's exactly what we hope to be able to do. As you stated, we have an endowment that's just under $500 million. That is large for many of our HBCU colleagues, But, when we compare ourselves to similar schools, similar size type and similar types of populations, our endowment trails many of our peer institutions. And so, we think that this, which is a huge increase in our endowment, will be able to provide scholarships for students. As we have a high need population. We've got brilliant students, grade point averages that range 3.9 and above. But we also have a high need population. 40% of our students are Pell eligible. About 80% of our students get some sort of need-based financial aid. So, we want to be able to bridge that gap between the talent that we see walking through the door and the real gap in financial resources. When you can take this incredible talent pool and match it with the resources that allow them to have this kind of life-changing education, I think we can make a huge contribution through this gift and, hopefully many more. We hope that this is the kind of gift that will inspire others to invest not only in Spelman, but other HBCUs.
So, I want to talk a little bit more about the cost of higher education, because we got some news earlier today that President Biden is continuing with his efforts to try to reduce the debt load that Americans have. Whether or not that is successful remains to be seen. But the cost of higher education at your school is $46,000 a year for a student living on campus. I got to tell you, that's a relative bargain in this day and age. We were talking with a colleague recently who about another school, not an Ivy League school, a small liberal arts college, over $90,000 a year. Why does the cost of higher education continue to be so high, Dr. Gale?
Well, every school is different. We've tried very hard to keep our costs as low as possible. In fact, we reset our tuition and fees a couple of years ago to be able to try to make our education as affordable as possible. But, costs continue to rise. Employment costs continue to rise. We have to be able to attract the kind of high caliber faculty that attracts the student population that comes to Spelman. We've got to make sure that we pay our staff and administrative support the kinds of resources. And so, a lot of the cost of a college or university are the personnel costs that continue to go up. But we also know that construction costs, other supply costs have all continued to go up. So, we try as hard as we can to manage those costs, to not have to increase tuition and fees, but we also have to be competitive in today's market.
But does it feel a little crazy when it's almost $100,000? I'm just, you understand this world.
I think we've got to work on both sides. We have to work on making education more and more affordable, but we also have to look at how are we making sure that students do have the kind of resources, access to scholarships, access to low-cost loans to be able to afford education. So we've got to work on both ends, and we've got work to do.
Right. So I read a lot about fundraising, and I would love to hear, how does a gift like this come about? It must have you must have been working on it for years and years. If you could take us through that, and also what's it like to get the nod? Yes, we're giving you $100 million.
Well, as I mentioned, Rhonda Stryker has been a long-serving board member, and she has seen the transformative nature of a Spelman education. We have young women who walk through the door, without, as young women, and whose lives are transformed by the education that they get here. She has seen the economic value that occurs when a young girl comes in the door, leaves, ready to go out into the workforce. If you look at the statistics, HBCUs like Spelman have punched above their weight for so many years. And I think she has seen that the value of investing can make such a huge difference. And so, gifts come because people believe in your mission. People who have resources, who believe in your mission, have the opportunity to experience why it's so important to invest. So Rhonda Stryker has had the opportunity to see what it means when you can match the talent pool that we have with the kind of resources that can be transformational and change lives. You know, Spelman College has the product of Spelman College is obvious. You know, we could rattle off the names of important leaders in business, in policy, in politics, in arts, entertainment, entrepreneurship. And so we know that there's a product that comes from Spelman that changes lives.
Well, thank you so much for finding time for us. Congratulations. We know it's also an important anniversary for you guys and the official naming of the school. So congratulations on that. Dr. Helene Gale, president of Spelman College, and of course, Bloomberg's own Janet Lauren.
Hey, let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. 5 Arab nations are quietly touting a settlement for post-war Gaza, for which they've secured the backing of the U.S. But there's one problem. The Israelis are not keen on the concept of a two-state solution, which is at the center of the proposal. Bloomberg's White House reporter Jordan Fabian says President Biden did speak about it with Benjamin Netanyahu today.
It's the first time they've spoken since late last year. These calls were happening very frequently after Hamas's attack back in October, but there have been some tensions in that relationship that have grown over the past few weeks. And so we don't know exactly what was said on the call. We know they discussed the conflict, but you could see this as maybe an effort to ironing out some of those differences that have become public over the past few weeks.
Bloomberg's White House reporter Jordan Fabian. Also in the region today, officials say U.S. fighter jets hit Houthi rebel sites in Yemen for the 6th time, taking out anti-ship missile launchers that were prepared to fire. Thousands of anti-abortion activists marched in the nation's capital today for the 2024 March for Life. It was the group's second march since the Supreme Court overturned Roe v. Wade. House Speaker Mike Johnson addressed the crowd.
Our rights do not come from government. Our rights come from God, our Creator. That's right.
Johnson also told them this is their moment to turn the tide on public opinion regarding the right to life. Turnout was lower this year due to a winter storm that hit the nation's capital. It's about to cost more to send letters in the mail. Come Sunday, the U.S. Postal Service will increase the cost of a first-class forever postage stamp from the current 66 cents to 68 cents. The price of domestic postcard stamps will also rise from 51 cents to 53 cents. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg, and we did have that new closing high for the S&P 500. That's the first one we've seen in just about 2 years. Inflation easing and also inflation concerns easing. And we also had consumer sentiment coming in stronger than expected. Ben Emmons, head of fixed income at New Edge Wealth, says he's pretty sure the economy can really stay solid for us.
Part of this soft landing or strange landing, how you want to call it, is that the economy is not going to recession because spending levels remain so high and it's invested in the economy.
At Emmons there on the Bloomberg Markets podcast, we also have this headline: U.S. weighs stepping up the fight against Houthis. That's in the Red Sea and Yemen as chaos drags on in the Middle East. That could weigh on things, but it sure didn't earlier today. The Dow up 1%, better by 395 points. The S&P 500 up more than 1.2%, 59 points higher, closing at 4839.81. That is that new record high I mentioned. And the NASDAQ, the biggest winner of the day, up 1.7%, better by 255 points. The yield on the 10-year lower, 4.13%. Spot gold up 0.3%, 2029. An ounce NYMEX crude down about 0.4%, 73.76 a barrel. Meta Platforms shares rose nearly 2%, close at a record high, recouping all of the losses when you think about it from a sell-off that at 2022 lows had erased 76% of the Facebook owner's value. Just amazing. And Alphabet shares gaining 2%. We're hearing, though, that Google DeepMind scientists are in talks to leave and form an AI startup in Paris, and that they have already talked with investors and have maybe, guys, gathered about $220 million for this effort already. And that is your Bloomberg Business Flash.
That's some serious money that they've already been able to gather.
Yeah.
$220 million. All right. Thanks so much for that update, Denise Pellegrini. Really do appreciate it. Well, Bitcoin this week down nearly 2%. Interesting to see that given the risk-on mood that we saw in equities, driving the S&P 500 and NASDAQ 100 and the Dow, Carol, to finish at fresh records. Since that spot Bitcoin ETF, or I should say, since the spot Bitcoin ETFs began trading last week, there are 11 of them, and spiked to more than $48,000 per Bitcoin. We're now seeing Bitcoin trade down about quite a bit, at about $41,646 per coin. Okay, so let's get into it with Stephen McClurg, Chief Investment Officer at Valkyrie Investments. We should note Valkyrie is one of the 11 companies with a spot Bitcoin ETF. That ticker is BRRR, BRR. Stephen, good to have you back with us. First full week of trading for spot Bitcoin ETFs. We saw Bitcoin move lower for the week. Just give us your take now that we've had a full week of this.
Yeah, absolutely. And thanks for having me back. Well, first of all, what's happening in Bitcoin is what we expected. We do expect Bitcoin to be pretty range bound between about 42 and 48 through probably closer to March or April. A lot of the risk on that we're seeing in the markets is due to an expectation that the Fed will probably start lowering rates in May or June. But with the Bitcoin spot ETF coming out, there's been a lot of outflows actually out of the Grayscale ETF.
I saw that. Yeah, why is that? It's sort of a buy the news, buy the rumor, sell the news. I don't even know the saying.
Yeah. So I previously was an investor in that particular trust as well, and really what's happening is people were locked in and couldn't get redemptions out when the fund was trading at a pretty big discount. And now that discount is narrowed back to zero, people are able to begin to withdraw again, sell out of it at market. So we've seen about $5 billion in outflows so far just in that ETF, which we did expect to happen. But we are seeing positive inflows into ours and all the other ones.
Well, talk to us about that, because I'm curious if those outflows out of Grayscale are finding their way to you. Give us an idea, size and scope, in terms of the flows that you guys, Stephen, are seeing into your spot Bitcoin ETF specifically.
Yeah, we're seeing a very steady stream of flows in ever since the first day of trading. We've probably witnessed anywhere between $20 and $30 million a day. For the most part, a few exceptions, but it's a very, very constant stream coming in. I think some of those flows out of Grayscale is coming to us. But I think a lot of it's new money, people that want access to an ETF and now have one and have it in their brokerage account. It's easy to maintain. So that's where we're probably seeing more of our flows is new money as opposed to flows out of Grayscale.
Any money coming out of your fund though? In that first
we haven't
week?
seen any.
Yeah.
Yeah, we haven't really seen anything coming out of our funds. We also have a mining fund as well as a mixed Bitcoin and ETH futures fund. And we've actually seen positive inflows into those as well, particularly the mining fund. A lot of people are looking at that as a way to gain extra beta or, more than a 1x beta to Bitcoin.
Do you know if any of that money going into BRRR is coming from advisors?
It is. And a lot of the financial advisors that we speak to, they have been waiting for a Bitcoin spot ETF. Most of them are independent. A lot of the advisors that work in the big wires, it's going to be a little bit of time before they start coming in. The firms like UBS and Morgan Stanley, their committees have to go through due diligence on the managers, on the product. Usually takes somewhat of a track record, anywhere between 1 and 3 years. So that's when we're seeing a lot of the big flows. But the independent RIAs are definitely coming in. And some of them that don't feel like they quite understand Bitcoin yet are making their moves into some of the Bitcoin ecosystem funds as well as the Bitcoin mining fund, which, again, we've seen a lot of positive inflows into that, just as much as we've seen into Bitcoin spot.
So help me understand or how you see it, right? One would assume Bitcoin, I know that some have said it's a safe haven like gold. Some would say no, it's when the risk trade is on. We've seen it kind of go each way. But I'm looking at Bitcoin down about 9.5% since the spot Bitcoin ETF started trading last week. I'm looking at a NASDAQ that's up 3%. I'm looking at an S&P 500 that is up about 1.2% in that same time frame. We've seen, Stephen, the risk trade come back. Is it surprising not to see Bitcoin moving up and the whole group overall?
Yeah, I'm not too terribly surprised, only because of the expected outflows that we were to see in Grayscale. I think once that is washed out a bit, we should start seeing the market move up again. And you also have to keep in mind that in the short run, things aren't always correlated, but in the long run, they are. And in the last 3 months leading up to the Bitcoin spot ETF launches, we did see Bitcoin rise in price quite a bit. So I think the market got a little bit too excited. Now it's waning down or getting back to a level that we think is sustainable. And once these outflows begin going out, I do believe we'll see it again. And on that note, I'll also mention that Bitcoin acts in response to the way that people treat it. So some people use it as an inflation hedge or as a safe haven. Some use it as a risk-on asset. And depending on the cycle or the mini cycle, we will see Bitcoin react in those various ways. I think the short-term move really is more of a reflection of selling out of one fund. And we should probably see it move more like a risk asset through the rest of the year.
Hey, back to the ETFs. I'm just wondering if you're planning to do a proof of reserves or maybe share your addresses at some point in the future.
Yeah, absolutely. So we actually do post we do post our reserves, and really simply put, we hold everything at Coinbase. So there is a 1-to-1 Bitcoin to what we say is in our fund. Sitting at Coinbase. Now, we probably won't show the address just because that's a security reason,
right?
Or that's a security issue. But we can point back to Coinbase on that.
Hey, can you give us 25 seconds on the next steps and plans? You've been acquired by CoinShares. We're already seeing consolidation in the crypto asset management space. So, what can you share about next steps? And again, just got about 25 seconds.
Oh, absolutely. And this is exactly what we expected in the market when we launched our firm 3 years ago. Once a Bitcoin spot ETF comes to fruition, we will see consolidation. We'll see larger asset managers that want access to this asset class and want expertise. And we're seeing, just like with us, we're seeing consolidation within the space.
All right. It's always fun to watch, that's for sure. Stephen, thanks for taking some time out for us. Stephen McClurg, Chief Investment Officer over at Valkyrie Investments, on Zoom from Nashville, Tennessee. This is Bloomberg Radio, and this is Bloomberg Business Week. Carol Massar, Tim Stenovic. This is Bloomberg.
company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. It looks like there is demand for Apple's new mixed reality headset. After all, in spite of the device getting snubbed by some big streaming services. More from Bloomberg's Steve Potus.
Apple's long-awaited Vision Pro is up for pre-orders as of today, and the first deliveries are scheduled for February 2nd. But delivery dates for all three models quickly slipped into March for online orders, and the device is already sold out for in-store pickup on day one at many locations. The apparent strong demand comes even as more streaming services snub Apple's headset, with YouTube, Spotify, and Netflix all not accommodating the device. Apple has largely marketed the device as a platform for video, games, and other entertainment. Steve Potus, Bloomberg Radio.
All right, thank you, Steve. Auto lender Ally Financial is out with better than expected quarterly results, and that stock gained just about 10%. We have major job cuts to tell you about at Sports Illustrated, calling into question the future of the magazine's existence. Morgan Stanley has increased James Gorman's competition 17% for his final year as chief executive officer, boosting his pay to $37 million. And we have this headline out: JetBlue and Spirit filing an appeal for a rule. Now, you know that the Justice Department and others had blocked their merger deal, and Spirit came out today. That stock surged when Spirit said that it was moving to shore up its finances, and also it said that it was standing by its plans to merger with JetBlue. So that's one of the stories we're watching for you as well. I'm Denise Pellegrini.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Carol Master live from the Bloomberg Interactive Brokers studio in New York. Let's get to Washington, D.C. now for a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. President Biden is making another move to forgive student debt as he ramps up his re-election campaign. Bloomberg's Nathan Hager has more from Washington.
The Biden administration has announced another nearly $5 billion in debt relief, covering nearly 74,000 student borrowers. The move comes a day after nearly 70 groups wrote to Education Secretary Miguel Cardona calling for more targeted relief for low-income borrowers, people of color, and those who've experienced hardship. Polls show President Biden's support has weakened among the Black, Hispanic, and young voters he'll need to secure a second term. In Washington, I'm Nathan Hager, Bloomberg Radio.
Republicans running the House Oversight Committee are celebrating the news that Hunter Biden will be sitting for a closed-door deposition late next month. Committee Chair James Comer says the president's son is a key witness in the House Republican impeachment inquiry. Comer telling reporters they're doing their investigation by the book.
We've done this the right way. We are in a position to win in court. If we weren't, he wouldn't be coming in to do this deposition. We have done everything the right way. We've been transparent. We've followed the law.
Congressman James Comer, Hunter Biden had requested his testimony be public, not private, saying he did not want Republicans to cherry pick his words to fit their narrative. One of his confidants testified this week behind closed doors and accused Comer of taking his words out of context. Japan is now the 5th country to successfully land on the moon. The country's SLIM lander touched down on the moon at about 10:20 a.m. Eastern Time today. That's according to the Japan Aerospace Exploration Agency. SLIM stands for Smart Lander for Investigating Moon. And as part of a cargo research mission, Japan now joins the U.S., China, India, and Russia as countries that have landed on the moon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nancy, thank you so much. You're listening and watching Bloomberg Business Week. Some headlines crossing. JetBlue and Spirit Airlines filing an appeal for the ruling that we got earlier this week that was blocking their planned merger deal. Really an acquisition, to be fair. JetBlue acquiring Spirit.
Yeah, we're seeing some serious movement in the after hours after these stocks moved significantly all week. Shares of Spirit Airlines, ticker SAVE, up 12% in extended trading, while JetBlue bouncing around a little bit, down about 0.8%. We did see Spirit absolutely tumble overall in the week, though it did surge today after reaffirming its support for the JetBlue deal.
The carriers filing the one-sentence appeal
deal that didn't specify any reasons for the decision. The airlines earlier said U.S. District Judge William G. Young erred in siding with the federal government in the case, and that the merger wouldn't lead, or that the merger won't lead to higher ticket prices for fewer choices for customers. Spirit had previously said the deal was still in effect as it explores ways to shore up its liquidity. Remember, we got the ruling on Wednesday. JetBlue shares tumbled, took down the whole.
Tuesday.
Or is it Tuesday?
Yeah.
Oh, okay.
And then, JetBlue shares just tumbling, and Spirit shares tumbling as well.
Okay, and so we saw some pressure. A federal judge this week blocked JetBlue's buyout of Spirit over antitrust concerns. So that deal, by the way, would have given JetBlue an influx of planes and pilots at a time when both can be hard for smaller airlines to obtain. So there's some business thinking behind this.
As we heard from George Ferguson over at Bloomberg Intelligence throughout covering this deal, there was certainly a mix of cultures and products when it comes to Spirit's product and JetBlue's product. Definitely would have been a cultural, or even if it does happen, it would be cultural difficulties with merging those two cultures. JetBlue